Hi everyone, we'll be starting soon. Just make yourselves comfortable and let me know that you can hear me. You won't be able to see me yet, but just let me know that you can hear me. Okay, so we'll just do an audio check for now. We'll do a visual check in a second. Just want to make sure, well, there's a visual check. You can see me. Just getting a few things ready at the moment. I just want to check up on some of the trades we've got going on in the markets, which I'm going to share with you in a moment. Just want to make sure you can all indeed see and hear me. So that's the case. Just let me know you can see and hear me. We're not started yet. We've got about another 5 minutes to go. Just want you to make yourselves comfortable. I just wanted to make sure the software and absolutely everything is working on that. So that's why I had just set up a little bit early, just so you can see me. I'm going to turn myself off for a second, if that's all right. But like I said, just let me know you can indeed see and hear me. Well, hear me anyway. I'm going to turn my video camera off for a second. Okay. So like I said, I'll be on live in about 5 minutes. This is your 5-minute warning. It's your 5-minute warning. Fasten your seatbelts, grab some water, go to the washroom if you need to. We're going to cross-check and unlock. All right, guys, there's a lot going on. So be with you in 5 minutes. Like I said, we'll be starting in about 3 minutes, guys. So feel free, like I said, glass of water, close the doors, make sure everything's set up. And actually, let me share a link. Let me share a page. See if that works. Yeah, there we go. Do that. Starting in 3 minutes. Starting in just 2 minutes, guys. Like I said, 2 minutes, please. Just want to get a few things ready for us. Right, guys, we're going to start in just 60 seconds, okay? Hope you're all ready. Hi, everyone. Well, let's start. It is time to kick off. I hope I didn't shout at anybody and scare you. You should be able to see me in the corner. You should be able to see the screen. There will be ways of expanding the screen. I'm sure if you look hard enough, you will find it in case my fat face is taking up too much space. Hope you've all made a note of closing the doors and everything else. I'm just sorry. The reason I'm looking away from you is I'm just looking at euro sterling and our trade there. Whilst it was short, it's pulled back a bit. So got a decision to make on that. We will go through all of this. Now, I have got more information than I've ever had in a webinar to give you all. So I'm going to go straight in. I will make sure as many of these slides as possible I provide to you, and I'll give you the URL before the end of the webinar. And I will also make sure that bits of it, the recorded bits, the non-proprietary stuff are there. No, it's not a recording, as you'll see when we look at some of the trades. Look, I try and give you the best stocks, whether for the investing side or the trading side, basically using our algorithms, because emotions are just too fallible. They're not very good. So we're going to be using a lot of process. We're just going to have rules and we're going to follow those. It makes life a lot easier when you've got rules. We're going to try and avoid some of the biggest problems that you traders face, which is, things like getting out too early and letting those losses run and run and run. And we're going to avoid the modern problems that traders face. There's an advert on my Facebook page, numpties like this, trying to claim they know the first thing about trading because they show you lots of screens. So there's a lot of pitfalls we've got to get through. Okay, top piece of information. I'm going to show you some trades in a second that we've got open. What you're seeing on screen there says is, just because I show you what I am doing does not mean you should, during the course of the webinar, do it. I'm not here to give you financial advice because I don't know your personal circumstances. For all I know, you're a 100-year-old widower or an 18-year-old billionaire. Different options. But what I'm giving you here is what we're going to be looking at. We're going to look at trading and we're going to look at investing. We're going to look at both. It's going to be bang up to date. Okay, so this is the Dow. Anytime on this webinar you see a red arrow, that means a short. Okay, anytime you see a green, it means to go long and buy. And this is where we are at the moment. This is where we got the short. We will soon see during the course of this webinar what's going to happen with the Dow. Over my shoulder, I've paused Bloomberg TV for the moment because obviously I don't want to be disturbed, but we'll see what will happen during the course of this. And it's a good position for us. It's on the 4-hour charts. We often look at 15-minute, 30, 1 hour, and 4 hour. You will see why 1 hour is our favorite, but when and how we look at the other time frames. This is the trading part for a second. We will go through everything. We will go through how to get data live and real time to solve the problem of data, how to, and make sure it's free, how to have a process to enter the markets, to exit the markets, how not to be a screensaver. We will go through all of those things from a trading perspective. Also, what to look at, how to decide what to look at, and what time frames to look at things as well. I should say this is the Dow June, June contracts, okay, futures contracts on the spread bet. So you'll have different figures depending on what you're looking at in terms of timeframes. We will also look at how do you decide whether it's an index, a currency, or an equity. For instance, currencies. Why do I like certain currencies like New Zealand dollar, Canadian dollar? What if you find currencies too complicated? What if you don't want to be in front of your screen all day long? How can we place a trade maybe in an equity? Place it and leave. Barclays at the moment is short after having a lot of upward moves, and you'll know I'm going to reiterate my feelings on banking stocks in a second and where I think the money's to be made. So we will go through all of that. All it's saying is don't trade live and don't copy my slides, okay? Most of you know who I am. 20 years ago, I was a private investor. I then, 10 years ago, set up, first of all, a hedge fund, equity long short based out of Cayman, and then we're a British asset management company, but the funds were domiciled originally out of Cayman. Then we brought them into Europe and set up more funds. So we've got both hedge funds and private equity funds. You don't care about all of that, which invest in private and public companies. Okay, so we've got both of those things. Rothschilds are the bankers, auditors Ernst & Young, and Allen & Overy are the lawyers. Right, part one, stocks. Why would I write something as over exuberant as stocks for 100 to 500% returns? Well, a month ago, I would have felt stupid talking about stocks which were going to look at those kind of returns. So that's the first part we're going to turn to. And then part two is trading strategies, particularly stops and risk management. Part three, and all this is updated from previous webinars. So obviously we've got the latest data coming up here as well, which I want to keep an eye on all of this whilst we're talking, because I want to tell you what's happening and try and give you as much as sort of looking over my shoulder experience as possible whilst we're doing this. Finally, we'll look at entry strategy. How do we know when to enter on the trading? So 2, 3, and 4 are on trading. Q&As for trading and investing. The first part's on investing. Now, yes, there have been some good results, better results than I could have expected. Those who followed me on my Telegram channel, and I'll come to that one in a second, who've been getting my daily broadcasts, who absolutely love it because we've had so much compliments on it and the kind of information. I'll show you some of the information which is on there. You will see that, yes, there have been some bigger returns than I expected. I did not expect Premier Oil in just 1 week to go up as a bit of a dead cat bounce, 31% and so on. But how do we put a strategy behind this? There's no point me just throwing some blasted names at you, because how do you know when to enter, when to exit, and how much capital to risk? Apologies that I'm looking away from you while I speak. It's just that I want to check up on several other things as well, okay, at the same time. Just got too much going on here. So why do I come to those numbers about 100% to 500%? Well, actually, this is the reason why. What you're seeing on on screen there. That's actually the reason why I say it. The reason why I say it is essentially that. Okay. If something has fallen from 100 to 50 and it goes back up, well, guess what? That is 100% return, right? That's the reason why I'm saying it. Because when we see things like that, and if something's dropped 90%, obviously the problem is, yes, it could go back up to where it was, but the danger with that is, well, how do I know that it didn't just drop there because it's rubbish? So it's all very well saying, yeah, I get a tenfold return, but how do I know I will actually get that tenfold return? Okay. And for that reason, we need to know overall, yeah, I see the return, Alpesh, but what's the rationale behind the investments? What I'm going to get all my data from is some of the latest reports from Goldman Sachs that we've got our hands on. And the reason for that is because they're obviously going to move the bloody market. So that's one of the reasons why. Okay. Now, what's happening in the States, and it's just starting to hit at the moment in the States, is that we're seeing the rise in deaths. Now, Given that that's the case, this is why it's important, because what's happening in the US is pretty much what's happening in the rest of the world is only the start compared to what economic impact it could have for the US, let alone whole states. I mean, even cities are major countries as far as the US is concerned. And that's why it's very concerning. And it's one of the reasons why you'll have seen from my previous data that whilst we were over here and hit something of a bottom, there is a risk. And when we look at momentum previously, there is a risk that whilst you can have a move up, it can drop down again. All right. It can move up as it has done, but can drop down again. Now, why do I say this? Well, again, looking at Goldman Sachs research, which I got my hands on yesterday. No, I got it on March 26th. What we found is this, that previously when there've been these kinds of drops, there is a drop and then a rise up. So I need to have a strategy which will allow me to own some stocks. We're talking about stocks in this first part, own some stocks, which if this is the market's only going to rise, then at least I'm in those stocks. And if it's going to fall again, then I've still got some protection and I can buy some more justifiably at the lower price. Got it? And if you want to have a look, and like I said, this is a lot of data I'm throwing at you, I will make sure you've got the link to have these slides and versions of it before the end of the webinar, okay? Because there's a lot of information. I don't want you sitting there with your phone going tick, 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 okay? So I'll make sure you got them. Again, this is from Goldman's, and again, it tells us that when there's been a 20% drop, as there was here, and there have been in previous years, what happens 6 months later? Well, it's rare that you're back in positive territory in 6 months. We are in April. That means by October, it's pretty rare we're in positive territory. Most of the time, we're still negative 6 months later. That's what that says, according to Goldman Sachs. And this you can pretty much rely on. They're sending to their wealthiest clients. Well, I know they are sending to their wealthiest clients. And this is what they're telling them. So they're positioning those clients in a way where they're saying, listen, two things. If you're going to buy anything now, we better make sure that even if the market drops, these are good quality stocks, which will still be worth buying at a lower price. And you might want to keep your powder dry. Keep your powder dry is what some of the biggest banks are saying. So what will do well in periods of market volatility? This is what our data says. And let's have a look, therefore, at what has historically done the best in such periods, like healthcare, utilities, and consumer staples. What the hell does that mean? Okay, what the hell does that mean? Well, again, going back to this counter trend rallies, they are commonplace. What does that mean? Well, when the trend is down, these rallies that we've seen during the existing market, that's common. So do not think this is going to be just a V shape. Does not mean it's going to be a V shape. Obviously, in a webinar like this, you don't have time to pore over all of this data. That's why I'm going to make sure that you've got this available to you. All right, I want to make sure anybody who's on my webinars gets so much value that afterwards they go where they go, yeah, that was brilliant. And I've got stuff I want to look at. Okay. Put another way, stocks also anticipate economic recoveries. Now, this is really important. We are going to have a recession, whether you like it or not. A recession is 2 consecutive quarters or 2 consecutive lots of 3 months with negative GDP growth. Given that we're all sitting at home, there's going to be negative GDP, right? Negative growth. The market lows to the end of recession is, well, on average 3 months before the market hits the low. Now, are you saying the recession, which we haven't even got the data for yet, is already over because last month we had the market low? No, clearly not the case. Okay. So what this data tells me is there is a greater likelihood we're still going to hit a market low. So I need, again, with those stocks to be positioned that I still get a return if I get in today. So what would I get into? I'm going to name some stocks in a second. What I do want you to know, like I said, I'm rushing through things because there's 100 slides to go through, but I will make sure you have them. So treat this like a university lecture where you're just getting warmed up in the webinar, and then afterwards you can pore over this as well. How long does a typical recession last? Well, they last 13 months. So we can't have had the market bottom by definition, because market bottoms occur 3 months before the end of a recession. We weren't in a recession 3 months from now having got out of it. So it just can't make sense. That's the average recession period. That's why I'm saying we're likely to have another dip. We're likely to have another dip in the market, not least because of this. Sell-offs occur much quicker than the rise to the peak. So yes, we've had this massive fall, but we're not about to go back in 3 months. We had this fall which has gone from peak to trough in 3 months. We're not about to go from trough back to peak in 3 months. Takes a lot longer, we're told. This is the basic maths of it since 1957. Okay, how long it tends to take months to climb to peak again? 16 months. Right? So whatever I invest in, what that tells me is whatever I invest in, let's say something in the last 3 months has fallen from 100 to 50, and I expect it to go back from 50 to 100 because I've looked at the quality of the company. It's not going to happen in 3 months that I'm going to double my money from 50 to 100. I've got to allow for the fact that, am I comfortable if it happens in 12 to 18 months or even 2 years? Well, 100% return over 2 years is fine. That's why I'm saying our duration has to elongate, okay? Has to elongate. Just as a quick diversion, those of you who are obsessed with metals and gold, and I'm not, these are the exchange traded funds which we're told in this kind of monetary easing where the governments are printing money, we're told, and I'm not an expert in gold or silver or any of those or gold mining stocks, these are the exchange traded funds you should be buying into, apparently, according to the experts on precious metals and miners. Okay, those are the ticker symbols if you're into silver and gold. I am not saying I'm doing it because I'm not, because that is not my forte. It's not the area that I know about. So I'm not going to be doing gold and miners. It's not to say it's wrong. I'm just saying it's what I stick to my my stuff. Okay, on all of that. Now I'm going to reset that poll and I'm going to do another poll. Here we go. Another poll. Will the Dow be higher by year end from today's levels? Let's see what you think. Now, the Dow recently fell 37.1% from its February high. What next? Number of days until end of bear market after the Dow has dropped 37%. On average, it takes 137 days, right, to get out of that. 137. That would mean August. Another reason to say that we've not seen the low, we've not got out of this quickly. Now, this is all generic. This is all sort of helicopter view. You want to know specific stocks, which I'll give you in a second. You want to know specific stocks. This is from McKinsey. This is what McKinsey are telling the biggest businesses in the world. What they're saying on this axis is public health response, how well we all behave, whether we make sure that we stay at home or we just do bugger all like the Swedish, go around, dance in the streets, all you want. Okay. And the economic response or policy of government. The better the economic response and better we stay at home, the closer to a V-shaped V-shaped recovery we have in the economy. So where are we on that? This is what McKinsey, as you'd expect from a management consultant, this is what they've shown to their clients. I hope you can all see it. I know it's a bit small. Like I said, I'll make sure this is all available to you. Okay, let me know you can all see it clearly. Hopefully you can all see it. Now, I'll tell you where I think we are. I think we're somewhere between this and this. Sadly, with America, I suspect they're going to shed loads of money, but I'm not sure the public health response is that great. So I think it might be closer to that, or even, I'm afraid, a bit like that, a W. Now, people say, ooh, W bottom share. Anyway, it's going to be one of those. So my point to you is this: given that we don't actually know which one of these is going to be the outcome, right? And given that we don't want to gamble, because we're not here to gamble. If you want to gamble, go to Ladbrokes. If you want to take this picture to Ladbrokes, now I want to put a bet on that one. That's up to you. We're not here to do that, right? What we need to know is how do we make sure our stocks will protect us, whichever one of these scenarios it is, Alpesh. Okay, that's what I'm looking at. Now, one way to look at that is to say, okay, Alpesh, give me the safety, the lower risk, because we're talking about investing first, remember, 12 to 24 months investing, then we'll talk about trading in a second. Give me the basket of stocks which are good quality. Guess what? Somebody already did that. It's the exchange traded fund or index tracker called Qual. Now, you will know from my Financial Times columns, my Diary of an Internet Trader columns, that I often talk about exchange traded funds and index trackers as a way of mitigating risk because they're a basket of companies. And this exchange traded fund has a bunch of quality stocks. What the hell are they? Before you start endorsing them, Alpesh, because yeah, they tend to go up on quite a big zip, and quality companies would be a good bet regardless of what's going to happen in the markets, especially given how much the market's fallen. Well, these are their top 10 holdings, and most importantly, which are based in Qual, and these are the returns. So you might say, screw the index tracker. I want to x-ray the individual stocks composed in that. What about these? Now you might say, well, Alpha, it's a bit too low risk for me. Not so sure. I mean, yeah, thanks, genius. You told me Microsoft and Apple. Are you kidding me? I've got some of those in my portfolio, double leveraged, and I'll tell you what that means in a second. I don't have a problem with putting some of those in. Okay, to make your screen bigger, let me know if I switch my video off, that helps. Or there might be some kind of arrows in the corner of your screen somewhere where you can turn it to full screen. There might be some arrows somewhere or a box or something on your screens which allows you to make it bigger screen. Okay, apologize, screens are always a bit of an issue. And what I'll do is make sure that you've got not only the video, but you've got these slides as well. Okay, I'll give you the URL for that at the end of the, well, before the end of the webinar, actually, before the end of the webinar. Right, so we've got some of these. Now, which ones of these do I like? I'll come to that in a second. These are the quality stocks. In fact, these are the ones which have contributed the most in terms of return to that exchange-traded fund. Right, so if you're looking at lower risk, and I kid you not, I told my sister this one last night. She messaged me. She goes, her husband wants to put a load into an ISA for their children's school fees. So I'm only telling you the advice I give my own flesh and blood, right? And I said, well, what you might want to look at is, I didn't just say the index tracker. I said, well, double leverage Microsoft and Apple, because I'm into those. Maybe a bit of Pepsi as well. Now you might say, well, Alpesh, really? Why? Well, I'll come to why in a second. But that's one strategy, is to look at quality stocks, index tracker, and then zero in. Well, let's get a bit more sexier than just low risk. What about that 100%, 500% returns? Where are you going to get these from? Well, one of the things I own is 3 times leverage S&P 500 exchange traded funds. What the hell is that? Exchange traded funds are like stocks. If you don't know what they are, they're index trackers like stocks. Okay, they're incredibly popular. I use the triple leverage. Now that makes it higher risk for me, but it means higher reward. Why am I willing to do that? Well, on the whole, since the last 150 odd years, the S&P is pretty safe. Okay, well, 100 years. It tends to generate over a 20% return in a given year, or over 20%, or hell, 10 to 20%. I mean, come on, more than half the time you get between a 10 and over a 20% return. I'm targeting 20% returns. If the S&P gives me a 20% return, a triple leverage one gives me 60% return. Now, let's put some caveats to all of that. First of all, I'm looking to hold this forever, because at the S&P, it's a bet on America. Triple leverage, I don't mind. Why am I not doing a spread bet? Spread bets would mean I'd get charged every single day, or a CFD would mean I get charged every day. An exchange traded fund has that all incorporated in. It's triple leverage for that reason. Okay, there's many different providers. Thanks, Fred, great question. Many different providers. Ask your broker. Now, the broker you'd use for an exchange traded fund is not the same one you use for spread betting or CFDs or futures trading. Broker you'd use for investing would be somebody like a Charles Schwab if you're in America, which you could use for trading, or in Britain, Hargreaves Lansdown and AJ Bell, those kind of brokers, the sort of investing types, and ask them what the ticker is for an S&P 500. But I'll tell you in a second, actually. I'll tell you in a second, Fred. We'll come to it. This is another reason why I think it's going to take a while for us to recover. Months recover from bottom, on the whole, tend to take quite a while. Okay, we get these big rallies, people get in, they relax, and then we fall even further. We get 54% declines. Not only that, Goldman Sachs sent me this to tell me, listen, mate, when it drops, it does move up, but it tends to go like this. This is the typical profile of a bear market bounce, right? They've looked at every single bear market in history. All right, they've looked at every single bear market in history. That is why I've said before, and I've said it on my Telegram channel. If you don't know what Telegram is, it's a free app which sits on your phone or on your desktop, and it allows me to broadcast things like what I'm doing right now to you live as soon as I've got it, and you can watch it later in your own time. It's freaking brilliant. Right, so this is where we'd got to on a bottom with the FTSE, and I had said previously, well, it could go as low as 3,800. Why? Because in the past, when we've got to these levels, we've had rallies, and it's gone as low as that. Right. So what are my strategies? These are my strategies. Sorry, I'm talking quickly. It is that I don't want to keep you here for 6 hours, and I've got too much information to cover. Investing strategy number 1, do what the super rich are doing. This is a database of the biggest investments from the S&P 500, the 500 largest American companies, color-coded based on the ownerships of the biggest funds like Warren Buffett's, Berkshire Hathaway, like some of the biggest, Peter Lynch, those kind of big names, all right? United Health is number 1, Amazon, number 2, Berkshire Hathaway, Booking.com, Fox, Viacom, CVS, etc., etc. So how do I decide, just because that's a number of names, how do I decide what to get into, how much money, what kind of returns, and over what time frame? One of the ways I look at these things, strategy number 1, is I look at something which I don't normally look at in normal times, but these are not normal times. The thing I'm looking at the moment is analyst price targets. Why? Because we can't look at future earnings. They're out of the... Who the hell knows future earnings in this environment? People have actually suspended giving them. So I'm looking at what analysts, which is this red line here, are telling their clients. Now, normally I don't look at it because analysts are full of crap because they're over optimistic. As you can see, these analysts average ratings, the share price never hit, right? But now the gap is so big, this should revert back to the analyst rating and get a bit closer. So what kind of returns are we looking at? Well, in the case of Capri Holdings in the S&P 500, right, we are looking at 134% upside. I have no problems getting that, even if it takes 3 years, because 134% return over 3 years, that's fine by me. And you can see the analyst ratings. All right. Walt Disney Company, safer, lower risk. Told my sister about this one, told her to buy into it. 44% upside. Right. If that takes 1 year, great. 2 years, 22% per annum, I'll live with it. For the investing portfolio, I'll live with it. All right. I'll live with it. Okay, so that's not too bad either, right? What other names have I got based on just analysts? Uber. Guess what? Goldman Sachs last week said Uber, they're telling their clients to get into 55% upside. I'll tell you something else that's going to happen once this COVID thing's released. Now, at the moment, hardly anybody's using Ubers, and you might think, oh, well, that's why it's fallen so much, and it's got some of the, it's not going to go bust because it's got so much venture capital money behind it. But when this whole crisis finishes, people are going to start using Ubers more often than public transport for obvious reasons. They're going to use public transport. They're going to go on the tube. Somebody's going to cough on them and they're going to say, screw this, I'm ordering an Uber, right? So that's one reason. If you like stories, I don't like stories. I like data. The data is the average analyst forecast means I'd get a 55.5% upgrade on that one. Upside, right? Hertz, car hires, 172% upside based on the average price target of analysts. And this is where the analysts are. Of course, a whole bunch are on hold. And of course, some are saying strong sell, strong buy too. I'm okay with that one, right? Because even if I get that over 3 years, that's fine, right? And that's only going back to where it was 3 months ago. Viacom, S&P 500 company, 190% to the upside. Big S&P 500 company, a lot of big companies are getting into it. Okay, Viacom, strong buy, hold. I'm all right with that. Another one, Citigroup. Michael, you just mentioned it. Citigroup. Michael, you were right. You said that's not the Dow. When I was looking at Indu earlier, it's a spread bet off the back of it. The Dow figure I'll show you in a second over there. 87% to the upside. I don't mind holding it. This is the software I use for my share investor students. Okay, we'll talk about that right at the end. I'm just giving you the names for now and what I use. And on my Telegram channel, when I come up with these names, I do it. On my webinars, I give them to you as well. So I'm feeding you the fish. I'm not teaching you to fish at the moment, giving you the fish, right? 90% to the upside on Fox. I have no problems with that one either. 134% upside, as I think I've done Capri already. Right, here we go. United Health, which was the most popular in the FTSE, in the S&P 500, only 33% to the upside. Yes, because Berkshire Hathaway and Peter Lynch and all these other people already got into it. Strong buy 16 and so on and so forth. I'm not going to go into all of this in terms of earnings forecast and everything else that I look into. This is not the webinar for it. We'll do separate ones. But United Health Group, S&P 500 company, only 33% to the upside. Okay, but I'll live with it. All right, but I'll live with it. These are the Wall Street Outlook forecast. Now, that's too small. The S&P is at 2761. 5 minutes before this webinar started. This is what Bank of America are saying will be the 2020 target for them. Barclays, Citigroup, Goldman Sachs, 3,000. They're a bit more bullish. JP Morgan are through the roof, 3,400 on that. Remember, we are at currently 2761. So this is where they see things being, as you can see, Oppenheimer has suspended any forecast. UBS a bit higher than it is at the moment. So you can see which ones think it's going to be higher, which is most of them. And only Bank of America, Merrill Lynch think it's going to be at a lower level than it already is. It's that you pays your money, takes your bets. I'm not going to say which one of those it is. What I care about is whatever the hell happens, am I looking pretty? Am I sitting pretty? Am I making money? That's what I care about. So how do we do that? Well, investing strategy 2. What do big banks tell their biggest clients? So let's have a look at what big banks are telling their biggest clients. One thing they're telling their biggest clients is invest in companies with lots of working capital and lots of retained earnings, because they're the ones who are going to survive. They've got the best balance sheets. They've got the best cash flow. Guess which companies survive? Those with the most retained earnings, in other words, profits in the bank account and working capital.
Those being the case, Altman score is how we measure that. All right, there's something called Altman score. You don't need to know what this formula is. My job is to tell you. Sometimes you go, wait, oh, Alpesh, give me a calculator. No, I'm telling you. This is how I teach people. I tell them what the underlying formula is, and then I give them the actual names of stocks based upon that. In the same way, you don't need to know how an engine works in order to drive. So you don't need to know what the formula is in order to know which way the market's like to rise. The second thing I'm going to look at, I'm going to give you the names of stocks in a second, is CROCI, cash flow return on capital invested. What's that? Well, this is a slide from Goldman Sachs Asset Management. And Goldman Sachs Asset Management used this to tell their wealthiest clients what to invest in. Cash flow from operations, all right? Well, cash flow is king at the moment, and gross cash invested. So they want to see which companies have the ability. Companies are like factories, all right? They can produce whatever the hell it is, but actually for me, all companies produces profits. You can say, no, Apple produces phones and Walls produces ice cream and sausages. No, they don't. They produce money. That's all they do. I don't care what the hell they make, they produce money. If that's all they produce, then I want to know which ones are good at producing cash flow in this environment on the capital invested. Why? Because that's what Goldman Sachs uses and Deutsche Bank uses. Deutsche Bank invented this and Goldman Sachs produce it. Guess what? There is no free software on this planet which gives you CROCI numbers. You got to pay for it, right? So I will give you for free the CROCI figures in a second, and I will regularly give them to you for free, all right? Because otherwise you're going to have to pay for them. Now, the total number of stocks you should have in a portfolio, roughly 15. I'm not going to go into great detail why, but on the whole, assuming a moderate level of diversification, i.e. non-correlation between individual stocks, this is why. So people sometimes ask me, how many stocks should I have? Well, don't argue with me whether it should be 16 or 14, right? But you get the point. The marginal benefit of diversification, i.e. reduction in risk and not putting all your eggs in one basket, diminishes substantially after you've got about, well, to be honest, 15 stocks, right? You can argue the toss, but you can see why. I want you on your investment portfolio. I want you on the investment portfolio to do that, all right? All right, to have roughly that many. So strategy number 3, let's look at CROCI and cash flow being king. Oh, sorry, I've got to give you those names. Alpesh, you idiot. Share the names with people. Right, let's do it. Right, what you can see here is the US 500, so S&P 500 CROCI numbers. You can see the CROCI numbers, and you can see the Altmans. Any Altman above 3 is great. All right, any Piotrowski score, that's to do with the valuation of a company, its growth, and so on. Alpesh Patel rating, the higher these numbers are, the safer the company. Now, if you go for a number on Alpesh value growth rating of 6 or lower, you're taking more risk. If you go for a CROCI under 10, you're taking more risk. If you go for an Altman score under 3, you're taking more risk. If you go for a Piotrowski score under, 6 or lower, you're taking more risk. Get it? You might get more reward. So you might say, Alpesh, let's do some maths on these figures, right? 3 months ago, that was, in the last 3 months, that's dropped 80%. So if it goes back to where it was, you'll get a 6-fold return in your money or whatever the maths is, right? If it goes back to where it was 3 months. So do you want a 6-fold return in a year or 2 years? Yeah, I'd like a 6-fold return, Alpesh. Hang on, Alpesh. I'm taking a bit of risk because the Alpesh value growth rating, which is based on our algorithms, remember I said right at the start, algorithms. It's an algorithm based on formula of valuation, growth, and income, shows only a 4. And the CROCI cash flow return is under 10%, which is pretty poor, right? And the Altman score is above 3, which means it's got lots of working capital, which is good. The Piotrowski score, which is also based on valuations, growth, incomes, is under 6. So not so happy, Alpesh. Exactly. Got it? Alpesh, I could get a 6-fold return, but I'm taking more risk. So you might then say, well, actually, you know what, Alpesh? I'm happy if instead I will, get let's look at something which is a bit higher over here. Alpesh, I'm going to let's look at Alaska. Bloody yeah. Geez. Okay. I'm willing to do a 6 on yours, a CROCI of 10, and an Altman score, well, it's 1.6, but, Piotrowski is 7. This one's a survivor. The American government's not going to let the airlines go. I'll double my money. And they're certainly not going to get Alaska go as an airline because, for obvious reasons, it's next door to Russia, as somebody once famously said. That's doubling your money. Will it happen? Well, you can see what the risk is, but you see how we work it out. That's the whole kitchen sink. Now, you might say to me, Alpesh, screw Piotrowski and Altman. I only want to look at your value growth, or I only want to look at CROCI. But now we've got the makings of an algorithm and a strategy. Got it?
And I'm running through things. I will make sure you've got, oops, what did you do? So this is from my Telegram channel. I can't go through all of this. Let me show you some of the other picks that I had on there. What I'll actually do is I'll just make sure I give you access to that before the end of the webinar. On the Telegram channel, I'll post a lot of this stuff so you can see it and it's updated. Okay, it depends. There's 3 Telegram channels, I should say. There's one for the general public, then there's one for my trading apprentices, and there's one for my share investing apprentices. I'll give you the one obviously for the general public because you're the general public on here. All right, so let's just put that to one side. But cash flow, Alpesh. You've mentioned cash flow a lot. Yes, here's one of my picks based on cash flow. Alumas Group. Why? Because its fair value is £1.61. Its current price is 63p. I have got the opportunity to more than double my money. How likely is that? Well, we've used a discount cash flow model, which often private equity firms like mine do on a publicly listed company. This is a measure of all its future profits and dividends, okay, today, valued as of today. In actual fact, price earnings ratios are just an indirect method of doing exactly the same as a discount cash flow. Right? It's just that price earnings ratios are more popular because they're a number. Whereas if you say to somebody a discount cash flow, they go, what? And all it is saying is if I can get 110 tomorrow, sorry, in a year's time, that might only be worth 100 today. So if something's only worth 90, it must be undervalued. Got it? I explain more of this in one of the other videos, but don't worry, I'm just explaining discount cash flows. This is what Warren Buffett uses. If you want to know, he doesn't use price earnings ratios. You'll notice you will never find a video or an article of him talking about price earnings ratios other than to diss them. He uses discount cash flow. He doesn't necessarily always put it in those terminology. He'll talk about book value as well. That's the balance sheet, but he's looking at cash flow. There's only 3 things any company has. It has its profit and loss account, which is, as Warren Buffett will tell you, full of bullshit because profits are so easy to manipulate. Cash flow, which is closer to the truth because cash is very difficult to manipulate, and balance sheet, which is the safety you have of what the assets are of a company, right? So he'll look at price book, which is balance sheet essentially, and cash flow, which tells you the going concern of it, all right? Now, what else do I like based on all of these factors? Cash flow, croaky, everything else. There's a lot of stuff I've given you. What do I like? Well, Amazon I've bought. That's the ticker symbol, double leveraged. Why double leverage? Because I like it. So why not double leverage it? I also like Brent crude oil, double leverage. Do I still like it? Well, would I buy it today? Yeah, okay. But because I think in a year, 2 years, 3 years, when it goes to $60, I will, if it triples on a double leverage, I'll have more than doubled my money. All right. If it goes from $20, let's say this way, to 60, that means it's tripled. I will have gone 6-fold return on my money. So am I happy buying those? Of course I bloody am. If it takes 3 years, of course I am. 6-fold return on my money in 3 years, of course. So Apple, this is what I told my sister. I also told her about, this is the FTSE 100 leveraged double fund. Why? Well, it's dipped so much. Now you might say, well, Alpesh, you just sent the first half telling us the market's going to drop again. That's fine. If it does, I'll buy some more FTSE. This is investing, not trading. That's why I'm happy to do that. And those are the ticker symbols, all right? Those are the ticker symbols. You can see why I am balancing. What I'm always trying to do is have 2 things. A strategy, which even if the market falls, I'm protected on. And if it rises, I'm very happy with. Plus trying to match getting the lowest possible risk through diversification, through big quality companies, with lots of good cash flow, right? Lots of working capital, okay, and size, and lots of analyst targets proving to the top. So lower risk combined with higher reward. Now, most of the time, risk and reward go hand in hand. You take a 50% risk, you got a 50% return. Who the hell wants that? We want to find those which have got the lower risk and higher return. That's how I'm trying to do it. All right. So that is strategy. And that's what's the strategy that I'm using to do that. I will in future look at these Chinese internet related companies, the big ones which are listed and quoted in the United States markets. Those are the names. I haven't gone through them and analyzed them yet. These are US listed, like Alibaba you'll have heard of. You might not have heard of the others because they're going to come out of the recovery the quickest. Okay. The reason I've mentioned all of this is because I think you can be better than overpaid fund managers. Everything I've told you up to now, make sure you got the slides and
the public Telegram channel access to and the URLs for all of that before the end of the webinar. So do not worry, okay? It's one of the bonuses of being on this webinar. You're going to get a whole bunch of free stuff. There's about 3 or 4 different URLs. It's on Apologies. The reason I think you can be you can be your own fund manager is because I got pissed off with fund managers and I did it. All right. I won a competition in the Financial Times to forecast the markets over a 1-year period. I came number 1. That's me on the front cover of the business section of the Financial Times. And number 17 was somebody called Neil Woodford, who then went on to manage $10 billion. Why? Because people are stupid, right? He beat Jasper the cat, the editor's cat, who was put in there for a bit of fun. Okay, he narrowly beat the bloody cat. He was that rubbish. And then he had to apologize in 2017. That pisses me off. This is why I do what I do. This is why I continue doing webinars and continue being on the BBC and talking about why these fund managers are rubbish and they should be sacked. I don't want your capital. Got it? I want you to be fund managers. Want you to be fund managers because those fund managers are crap at what they do and they're overpaid. And I'll tell you why they're rubbish a little bit later on. These are the people that I used to lend money to when I was at university because they couldn't even manage their own finances, let alone for other people, right? It's as simple as that. And they annoy the hell out of me to another degree, as you can see. So I want you to be your own fund manager. I want you to have that education. Okay, so part 2, trading strategy, core components. Let's now move from the investing part to the trading part. Now, whatever we can make in investing, we should be tripling that in trading. Why? Because we're spending more time trading. So I'll give you an example. Let's go back to Barclays. Whatever I could make buying and holding Barclays, right? There's no point me making the same by trading Barclays. I've got to make triple that. Otherwise, it's not worth my time. But how do I know what to invest, what to trade? Okay, how do I know what to trade? And by the way, the most important thing you can take away from today is this. Have an investing portfolio as I do, because it gives you peace of mind. You've got money for the long term and you're not fiddling with it and a great return on time invested. And have a trading risk capital portfolio as well. If you want to trade, it's higher risk, but higher return. Why? Well, because one will give you returns just for doing nothing. The other one should give you outsized returns if you learn the skills. And we want to learn the skills. We want to set ourselves up so we've got free, derived, real-time data. Now, there's one thing that I hate more than fund managers like Neil Woodford, and it's subscriptions. I don't want you paying anything every day, every week, every month. So we've got to make sure we can set you up so you know what to look at for 15 to 30 minutes a day, every day, okay? And place one quality trade a day. Those are the figures we're going to look at. So let's get on with that because I am behind schedule as I always am because I'm giving you too much information. Thank you, Fred. Fred has said from one of my picks, Patel, he's nearly doubled his money. Yes. Now, Fred, look, I got to say, I'm going to broadcast this comment to the room. Fred said nearly doubled my money, but that was one of my picks on Patel. Now, does that mean my job is to throw darts and pick companies? No, we picked Patel based on a strategy. Did we know it was going to double up within 2 weeks? No, because as Fred will remember, I said, even if it takes a year, I'm happy. Why? Simple statistics. I want to teach you something which will save your life, right? The more things you try to predict, the lower the probability you're going to be right. So I was happy to predict or forecast that Patel, who make hand gels for boots, right, will double. Now, if I predicted it's going to double and in 1 year or 1 week or 1 month, then I'm less likely to be right. It's a bit like saying this. I predict that I'm going to get a heads on a coin and I'm going to throw an even number on a dice. There's a lower probability of that happening than simply saying, I predict I'm going to get a heads on a coin. All right? Simple statistics. Some of you will understand what I'm talking about. For that reason, I didn't say to Fred when it's going to double. I just said that I think it's going to double. And if it takes a year or 2 years, well, fine. I can live with doubling my money in 1 to 2 years because I'm not greedy. Thank you, Fred, for mentioning that point about Patel. That's what I put on my Telegram. Now, that is a world away from those idiots who will broadcast you, oh, this is going to double by next week. This is going to double by next month. They're amateurs. They're con artists, all right? Anybody who tries to tell you a time frame on top of it, that's gambling. Our job is not to gamble. Our job is to use process, strategy, discipline, okay, in order to get returns. Why? Because it's algorithms and processes. For algorithm, just another word is process, right? That running the world. Too many people are still trading like this. My job is to get rid of that, okay? Where you're listening to this, reading this, and tapping away, you're going nuts. What we're going to focus on is the simplicity of trading. The simplicity of trading tells you we're going to start with $1,000 account. Actually, you're going to start with a demo account. Now, I know some of you are going to turn around and say, Alpesh, I've got $1 million in the bank. Why are you telling me to start with so little money, okay? The reason is whenever you're learning any new skill or strategy, you start off with less capital, okay? So we're going to start off with 1,000. We're going to make sure that we have two screens, the laptop and the PC and our cell phone. That's it. That's the two screens we need. We'll place the trade, say, on the cell phone, because all brokers offer really good cell phone apps, right? You can either buy or sell. We need to know when. We're going to start with just 7 pence a point or even lower. It doesn't matter whether you're doing CFDs or spread bets, right? We're going to have to work out where our stop loss is, and then we're going to use a trailing, stepped, not dynamic, stepped stop loss. I'll explain what that is. The end goal we're going for, the end goal, my friends, we are going for is we want to try and make we're going to learn the skills to make 500 to 1,000 a month. Now, why such a small, modest sum? The reason is this. If you can make 500 a month, you can make 1,000. If you can make 1,000, you can make 2. If you can make 2, you can make 4. If you can make 4, you can make 8. It's the skills that matter. Okay, we're not trying to be greedy. If you can do baby steps, you'll learn the skills. If you try and do giant leaps, you won't learn the skills. You'll fall and you'll say, nobody can do this, right? That's why it is psychology. Now, half of you have said you got over $10,000 to invest. Fine. Still start with a demo account. And then when you're consistent profitable, using the strategies I'm going to tell you, start with $1,000 account. Nobody's going to switch the markets off. You've got all the time in the world. Do not be gamblers. All right. All of you are going to have to explain to your spouses at some point, or your children, or your parents, or whoever, that trading isn't gambling. And one way you're going to do that is the things that I'm telling you. All right. Now, this is something Seb had sent me recently. All good trading comes down to what you see on screen right now, right? Yes, we might have a buy signal. We might have a sell signal, all right? We might have another buy. Notice how these three were all wrong. All good trading strategy. I'm going to give you my strategy in a second. We have 10 in my hedge fund. The earliest one was taught to me by Bill Lipschutz, the global head of foreign exchange at Salomon Brothers, in my first book published by the FT 20 odd years ago. Don't buy the book. It's 20 years old. I get £1 in royalties. Not worth it. Lessons in trading strategy from the world's leading traders. He was one of the 10 world leading traders that I interviewed for the book. They became friends and mentors. And he taught me all I knew. 10 years after that, I was competent enough to set up a hedge fund, and the rest is history, as they say. So I wanted to meet the world's best traders because I wanted to do this full time. So I thought I better meet him. Now, any good trading strategy should make sure that any losses are small in size and short in duration. Write that down. Small in size, short in duration. Notice that's a loss. That's a loss. It's a loss. That was a winning trade. Hang on, Alpesh. You only had 25% winning trades. Yes, because trading is about not being right, but making money. It's about making money, not being right. So this is an extreme example. And the reason Seb had sent me this is a reminder of the early days when he became an apprentice of mine. Well, God knows, 4 or 5 years ago. Okay. And his point was this. It was a good reminder, always good to go to basics, is this. All trading is, look, a coin is right 50-50. We're just going to be trying to be right a little bit better than a coin. That's it. Anybody who tells you they're right 90% of the time, tell them I'll pay them £1 million to come and work for me. All right, just let me know. All right, nobody ever takes up the offer. Anybody who claims to be right 90% of the time, 80%, 70% of the time, they're just lying to you. All right, a coin, and I want you to do this experiment after this webinar. Toss a coin 100 times, and I want you to write it down. You will get a winning streak of being right 100% of the time. Okay, for say 10 tosses. Does that make you the world's greatest coin tosser because you got 10 heads in a row? No, it means you had a winning streak. There's a difference between a winning streak and an idiot who says a winning streak is what they always get. That's the difference. We're going to try and be right a bit better than a coin. Now, I'll tell you how we're going to do it, and that's going to make you ample money. That will take you, okay? That will take you to a billionaire status if you want it, right? Now, what we're going to look at in this webinar is how do we know where to put the stop loss? How do we know where to add to our winners, which is that point there? All the most successful hedge funds in the world, winners add to winners. They add to their winning trades. Now, you don't have to. I'm gonna give you some advice. There's beginners, there's intermediate, and there's advanced. That's what everybody on this planet is: beginner, intermediate, advanced. If you are a beginner,
using whether it's our strategy or your own. I'll give you our strategy at the end, but, well, not at the end, before the end. If you are a beginner, you would keep things simple because you're a beginner. You're going to have a fixed take profit and a fixed stop loss. And because you're right a little bit more than you're wrong, you'll make some money. Not the most money in the world, but you'll make some. But you'll miss out on these big rises. That's what beginners do. An intermediate level person will enter there, and we'll talk about how you know when to enter, right? They will have their stop loss here, but that will be a trailing step stop loss. They're not going to be a screen slave. They're going to place the trade and go, right? We're always going to place the trade and go, right? Now, what they're going to do? Well, they're going to have a stepped trailing stop loss. That means when the price gets up to this level, this stop loss moves up to here. And when the price gets up to this level, this stop loss moves up to here, and so on and so forth, and eventually we'll take them out. Why? Why? Because it gives lots of room for maneuver. Now, that's intermediate level, okay? That's what intermediate level does. Step trailing stop loss. What does an advanced level trader do? A hedge fund manager do? Hedge fund managers do this. And by the way, all people, no matter who they are, losers add to losers. Write that down. In other words, you will never add to a losing trade. You will never add to a losing position. Now, you can argue the toss with me all you want, but I can tell you there's not a billionaire trader in the world who adds to losing trades. I know this because I know the hedge fund industry. And if you don't believe it, I've written the Bible on trading, and not only that, international bestsellers published by the Financial Times on trading. So if you need my proof as to why you really ought to listen to what the hell I'm telling you, I'm not bragging, I'm trying to get it across. I don't want you to lose the money you've got. That's what I care about, and that's why I've got to be a bit forceful, because people sometimes argue the toss. No, we're trading. You're not going to add to your losers, right? So what does the advanced trader do? This is what they do. See that distance from the entry to the stop loss? The mirror reflection of that is the red dotted line. The red dotted line, okay, which is this figure up here, add, right, is where they would add to their position. Now, they can tell the broker in the morning, oh, can you buy at, say, 100? And can you add to my position at 110? And can you put a step stop loss for each? So for the first one, the stop loss is at 90. And for the next one, it's at 100. Right? It's all written here for us. I mean, obviously, I've used the numbers 100, 110 to keep things simple, but you get the point. Now, and they're both going to have, those positions are going to have step stop losses. Now, you might say, hang on, Alpesh, that means that if it goes up here, I could have pocketed my money and walked away, bird in the hand. Yes, but you'll have missed out on this. Okay, Alpesh, well, why don't I just do a trailing stop loss? Because if you do a trailing stop loss like an intermediate trader, you'll have missed out on doubling down and going up on a bigger trend. But Alpesh, why didn't I do double the size trade to begin with? Because if it went down and you lost, you would have lost a lot of money, which you don't want to do. You'd rather add to your second position here when you've got some profits in your pocket, okay, or profits in the bank account, right, and risk those to make more. But Alpesh, wait a minute, that means the first position, if it went down here, could go to zero, so I would have missed out on those profits. And the second position, I'd actually be in a loss, even though at one point I was in a profit. Yes, because this is what you're after. Well, Alpesh, I don't want that. Fine, right? What I'm saying is advanced traders, winners add to winners. You know why? Because, and you might say, I don't want to do that, Alpesh. I'd rather just have a bird in the hand. That's up to you. I'm not forcing you to do anything. 80% of your profits as a billionaire trader will come. 80% of your profits will come from 20% of your trades. 20% of your trades will be these. Alpesh, why aren't all my trades big winning trades? Because I don't have a crystal ball and I can't see into the future through a time machine. Not just me, nobody does. All right? So that's why we structure it like that. Now, Alpesh, how did you get your stop losses there? I'll come to that in a second. Now, well, we're not going to go through this business plan. What we're going to do is go through another business plan in a second. This is a typical, well, it's not a typical month. This is New Zealand US dollar, where we won, we lost, we won, we won, we won, we won. That was a winning streak. I'm not going to say I'm amazing and brilliant. I'm just saying we won in a few trades, right? If you made 531 pips over those 2 days, it was over 2 days. That meant you made £215 per day. The maths is out a bit, don't worry. Made £215 per day, okay? Given that you would have spent 30 minutes a day finding the trades, placing them, and walking away through a process I'll show you, that means you made £215 per hour, 30 minutes a day, 2 days, 1 hour, right? What you need to know are these figures, because trading is, write this down, the best entrepreneurial business in the world. If this is a business, you as a business person need to know two figures, profit per day and profit over time at screen, i.e. return on time. So what are those numbers?
Well, the numbers are profit per day, your daily return was £215, and profit at time at screen was £215 per hour. Your hourly income was £215 an hour. So how do we increase these numbers? That's what it is about. Well, one way is reduce your time in front of the screen, so I'll show you that. Another way is make sure we're more accurate in getting bigger moves. How do we do that? That's what this next part of the webinar is about. We're only going to try and be right 50-50 or 60-40. No gambling, no trying to get in while the market's still falling in anticipation of an earnings announcement. If you want to do that, go to Ladbrokes. Okay, no trying to pick the market bottoms because we don't know witchcraft, we don't have a time machine, and we don't have a crystal ball. Plus, all the greatest hedge funds in the world, and I'll show you slides from some of them, never try and pick market tops and bottoms because they're not idiots. Only idiots will talk to you about, oh, I've got a market bottom or a market top, and they'll draw lots of Fibonacci and Elliott waves to try and do it. They're going to lose money. They're going to lose a shed load of money, and they're going to try and convince you to do the same as well. Don't do it. Don't fall for it. What we do, like the biggest hedge funds in the world and the most successful people in the world, is we get in once the trend has started after a bit of a lag. How do we find that? That's what we'll do in this webinar and get to it. Okay. Again, the principle is if you can grab 100, you can grab 1,000. If you can grab 1,000, you can grab 2. If a coin's 50-50, surely we can just be a bit better than a coin with all our analysis. Of course we can. All right. Of course we can. That's the point of it. Now, what are the numbers? These are the numbers I want you to make a note of. And remember, 15 minutes a day before and after work, we're going to scan 12 to 20 products. I'll tell you which ones in a second. One screen, your PC. You can have more if you want. One trade per day, minimum 20 trades per month. And I'll show you in the business plan why that makes you money and why that slower process actually leads to greater wealth. All right. These are the things we're going to look at. Indices, equities, major and minor currencies. And minor versus minor currencies. We're going to avoid major versus major because the big banks fight over them and they're more volatile or too volatile. Got it? Some of the best times to trade are these, but they're not. You don't have to. Don't get confused. You don't have to. The market is not 9 to 5. It's open 24 hours a day, which is great. As I think it was Viola, one of my students had said, you can come from work at 3 in the morning and just have a look at it for 30 minutes and pick out of this immense amount of choice they have. The actual choice they have is all this. Now, the way we set our systems up is that we will narrow it, and we're not going to look at every single one. We don't have enough money in the world to put into every single trade, every single moment, or every single trend. Nobody does. There isn't a $1 trillion fund couldn't put money into every single trade, every trend, every second of the day. All right, so we're going to narrow it down. That's what we're going to have to do, and it comes down to A, B, C, D. D is any losses will be small in size, short in duration. Write that down, okay? Stop losses based on the volatility of the market. More volatile the market, the further away the stop loss. The ingenuity of that is when the market's more volatile like now, you're not stopped out by noise because the stop loss is further away. That's called volatility-based stop loss is called VSL. But if the stop loss is further away, your position size is reduced, so you don't risk losing more money whether or not the market's more volatile or not, because your position size is reduced. That's called volatility-based position size. I can go over that at the end. Again, all the best hedge funds, all the billionaires in the world do this. We analyzed for one of my books what private investors, the 30% who were making money, were doing, private traders, online traders on spread betting and CFD funds were doing, which was making money. Were there any comparisons with hedge fund managers? What we discovered is by accident, they were actually using volatility-based stop losses, volatility-based position sizing. Losers add to losers, never adding to losers, and winners add to winners. That's what they were doing. Okay, and that's what we're going to break it through. All trading comes down to this, SELMA. So stop losses, volatility-based, write it down, VPS and VPL, volatility-based position sizing, volatility-based stop losses, VSL, VPL, all right? Entries, we're going to look at in part 4 of the webinar in just a second. Limit order is, if you're a beginner, it's a take profit order, okay? Money management, I should say, not movement. Money management, well, I have no psychology issues. Why do I have no psychology issues or trading psychology issues? Very simple reason, okay? Look, I've got signals. Why the hell do I need to use my brain and emotions? I want to reduce the use of my emotions and my mind, because that fall and then that rise, I've got to change my mind, then that fall again would drive me insane, okay? Demetrius, the programs and the software and all the algo rules I'll give you as we work through it, okay? So I'll answer all the questions, and that's the volatility-based stop loss. By coincidence, and it often happens, it's not actually coincidence, it's very clever algorithms, it's often at the recent high. And that's where we double down. So we've doubled down in June contracts.
New Zealand dollar, Canadian has got a long signal right now. That's on air. Okay, so you can see it. That's where we had the long. So we had a short, we had a long previously, we had another short. All right, now this is long as we speak. So we can follow that by the end of the webinar and see how that's been going. Barclays is short at the moment. You can see after some significant rises. Some of you have asked me about Barclays and Royal Bank of Scotland, all the rest of it. We'll come to that later on. All right, we'll come to that later on. So let's have a look at some more questions. Now, money management, how much money do we put into a trade? We'll come to that in the business plan section, which is the next bit of the webinar, and additional positions I've spoken about already. So I said, all of you have got to justify, whether it's to parents or children or spouses, that you're not gamblers. This is what gamblers do. Right? All of this is what gamblers do. You are not going to be gamblers because you're going to do these things instead. So when they say to you, are you bloody crazy? You're furloughed and you want to go trade? You're going to say, well, wait a minute. No, darling, I'm going to start with a demo account. I'm not actually going to risk any real money at all. I'm not going to pay any subscriptions for anything. I'm just going to make sure I don't gamble. Right? This slide, that's the one you show them. That you're not going to be gambling, all right? And this is what the profits of all the most successful traders in the world look like, whether they're the 30% private investors or the big hedge funds. All of them, when you look at their P&Ls, always look like this, okay? They'll have some trades which are small losses because they got into it thinking it was going to be a big win, but Donald Trump did a tweet. They'll have some small wins because they got into it thinking it's going to be a big win, and Donald Trump did a tweet, and it became a small win. These two cancel each other out. 20% of their trades will provide 80% of their profits. 20% will give 80% of their profits, which is when they're adding to their winners. Those are the big wins. They'll have no big losses. The difference between you and a billionaire hedge fund is only that you've got something in this column. That's the only difference. Your trade results are exactly identical to this, except you've got big losses. So my job is to make sure you don't have big losses. One of the ways we do it, L plus L, losers add to losers. You're not going to add to losers. Volatility-based position size, volatility-based stop loss. Those three things will make sure you don't have big losses. But wait a minute, Alpesh, I don't even know how to enter the trade. I'll come to that in a second. If you want to see that data, don't buy the book. I'll give you the best bits in this webinar. Anyway, Barclays did my book launch because, whoops, and that's the CEO of Barclays UK, that's my wife. Okay, we publish the data. We publish our data. We don't just make stuff up. We publish our data, and we often publish it in the Financial Times. And I've been publishing my data in the Financial Times since before 2004. Right? That's it. Alpesh Patel, rather. There you go. Do the right sums, maximize returns, etc., etc., etc. Right? Now, listen to this. Forget such magazine headlines as 10 stocks you must buy now. Market success has nothing to do with stocks you pick. We go into why it is some of the things I'm talking about. So what's the trading strategy? My mentor, Bill Lipschutz, was one of the 10 people I interviewed for the book, Mind of a Trader, Lessons in Trading Strategy from the World's Leading Traders. His boss was Warren Buffett. Bill was global head of foreign exchange at Salomon Brothers. He now runs a hedge fund called Sage Asset Management. He was hedge fund manager of the year last year. And he became one of my mentors through the book. Not only him, 9 others. Don't buy the book. I get £1 in royalties. I'm not doing webinars to sell books, okay? I'm going to give you what he taught me and the other 9 taught me in terms of entry and money management. This is all we're after. He said to me as a private investor, Alpesh, as a poor student, remember 20 years ago I was a student, right? As a poor student, he said, what you're trying to do and what's best for you is look for trends. Right, with the stop losses and when to add to winners. You're going to keep it simple. I said, well, how do I know this is going to make me money, Bill? How's it going to get me on the road to rich? He knew what I was after. I was a student. I wanted to be rich. I had no silver spoon in my mouth. Okay. And he said, well, it's what some of the biggest hedge funds in the world do. And this is a slide from Winton Capital. It is one of their slides, not one of mine. One of theirs, explain to their investors what they do. So here's an X-ray into a $350 billion hedge fund. What they do is they buy after a lag. So how do they know? Not when the trend has started, because they don't know. They don't bottom fish, and they don't try and outsmart the market by getting in while it's still falling, right? That's them. I think they're worth listening to. A $350 billion hedge fund is worth listening to, all right? So just want you to know that they're worth listening to for that reason. And like I said, all trading comes down to these things. When to add to that winner, when to buy, when to stop loss. So let's, in the final parts of the webinar, can I just
continue in the final parts of the webinar, give you the business plan of how much money you could make, and then the entry rules, and then we'll do the Q&A. Before I do that, in the last 10 minutes, they're not yet, in the last 10 minutes, you don't have to stay for those last 10 minutes. Can I tell you about technology my hedge fund has spun out? The reason I want to tell you about technology my hedge fund has spun out is because we're going to float it on the stock market, and I want to publicize it, right? It's very simple. I want to publicize it because I'm proud of it, and I think it's the Google of trading. Google is an algorithm which searches the internet for information. Well, we've created an algorithm which does, which searches the market data for trends, all right, which searches it for trends. And it doesn't use Fibonacci and Elliott Wave and head and shoulder patterns. It's actually spun out of the hedge fund. It's one of the 10 algorithms we use in our fund. And we're going to float it on the stock market because either the hedge fund's going to be a $10 billion hedge fund, or if it's not, our technology is. And we stole an idea from Jeff Bezos, the founder of Amazon. He was a hedge fund manager at D.E. Shaw. He created Amazon and became the world's richest man. Well, we decided to spin out technology from our hedge fund. Actually, it was one of our clients whose idea it was. So can I have your permission right at the end of the last 10 minutes to do that, please? Right in the last 10 minutes to do that. And I hope I get your permission to do that. Now, let's talk, therefore, part 3 and part 4 of the webinar. Business plan. Okay, how much money could you make? Well, all of these are trend following fund managers, and trend following momentum based trading is what we're going to look at. All right, my favorite, because there's a British angle. John W. Henry owns Liverpool Football Club, trend following hedge fund manager. Man Group, because it's British, and David Harding, because he founded Winton, is British. They're all trend following. So they are. They're all trend following hedge fund managers. So when we look at the business plan, how much could we make? Well, of course, we'd like to make 4.5 billion. I'd like to make 4.5 billion. That's going to be dependent on how much capital you can get your hands on, first of all. All right, I'd like to make 3.3. I'd like to make all of these billions. Well, you might have seen data more like this, which is a bit more realistic. Now, I don't know this broker. I'm not endorsing them, but this is data for one of my older books that we found, which was the average profit from the top 100 spread betting or CFD traders that they had was 100,000. All right, now we're not going for that. We're not going for that. Let's calm it right down. We're going for 500 to 1,000 a month. That's all we're going for, 500 to 1,000 a month. But first, to do that, we need to pick what instruments are we going to be trading, because there's this many instruments. So which are going to be the best for trend following, right? Let's get it set up. These are the ones I suggest because, based on my experience, I think they're going to be rather good for trends. And these, take a screenshot if you wish. I will come back to it later, but take a photo. I'm not going to read each one of them. Okay, quick, get your phones out. I've told you 100 times during the course of the webinar and before it, please have your phones ready. If you haven't, it's gone. Sorry, you missed out. Trading's all about speed. Okay, so we've got that, right? And these, don't worry, I'll come back to it. I'm just teasing you. I will come back to those slides. So let's do the business plan and then the entry strategy and then Q&A. I need you only for another 20 minutes, but it's the most important 20 minutes. Without it, you won't have made any money, right? So the business plan. This is the business plan Bill Lipschitz gave me. That's my mum. Okay, that's not me handshaking Prince Charles, giving him coronavirus. That's my mum. And it's not an FX trader plan. It's actually for anything we're trading, okay? And the reason it's called Road to Rich is because Bill Lipschitz, global head of foreign exchange at Salmon Brothers, said to me, Alpesh, trading is like learning to drive a car. Initially, it looks incredibly complicated, but in actual fact, the Dow itself, how's the Dow doing? Let me just push that up. In actual fact, let's just move that out. So that's the Dow itself. Okay, earlier I showed one of the futures contracts on the spread, but that's the Dow itself, which at the moment we're long on, but we'll see, because when the markets could always drag it lower at any given point. Okay, we're going through the business plan now, Glyn, right? So what Bill said to me is, listen, before I tell you when to enter, when to exit, you need to know whether or not trading's worth your while. Maybe you haven't got enough money. Maybe you've only got £1,000 in your, or $1,000 risk capital. How the hell are you going to make 1,000 a month from having just 1,000 risk capital? It's not going to happen. I said, oh, so he said, you need to do some maths first of all. I said, okay, let's do the business plan. So let's do part 3 of the webinar now, the business plan. Then we'll do part 4, which is the entry signal, the strategy for entries, which wraps everything up. And then we'll do the Q&A. So he said, the first thing you need to do is set your risk capital. And he explained to us, well, the reason that me driving the car is because the analogy is with driving. Like driving, trading looks complicated. You've got wing mirrors, rear view mirrors, steering wheel, gearbox, accelerator, clutch, brake. Just like trading, you've got stop losses, volatility-based stop losses. You've got when to add to a winner, what products to look at, what timeframes to look at. Looks too complicated. Yet we learn to drive, don't we? And I would say, as a good rule of thumb, is however long it took you to learn to drive is how long it'll take you to be a consistently profitable trader. So if you learn pretty quickly, pass your test first time, as I did, then you'll learn trading pretty quickly because you're just good at picking up skills. If instead it's taken you 20 years to learn to drive, we might have an issue. We might need to talk about that. All right. So the business plan Bill Lipschitz gave me to decide whether or not I should be trading to begin with, because that's the first thing. Should we be trading to begin with? Was this business plan? This is important. I want you to write this down. And even if you've seen it before, I've updated some things. Please write it down. And then we're going to look through some of the trades again, which I particularly like. And trend following, by the way, works particularly well on cryptocurrencies. I'm not saying you buy them for the long term, just saying it works really well on cryptocurrencies, because cryptocurrencies don't have banks trading the crap out of them, making volatility, making things go up and down. Instead, you've got humans, which are so much easier to analyze by an algorithm. Okay, maximum loss, 1% of total capital is what Bill said to me in my business plan. He said, imagine in the business plan, you've got £20,000. I said, Bill, I'm a poor student. I don't have £20,000. Okay, £20,000 would have been all the money in the world to me. And he said, no, a business plan is about where you're going to be. If you're consistently profitable, he said, you will get your hands on £20,000 from friends and family. They'll give it to you. You'll share profits with them. You'll do one way or another. You'll get your hands on £20,000 if you're consistently profitable, right? Because that's the way to look at it, not get the money first and then learn to trade. Jeez, that's like saying buy the Ferrari and then go be an F1 driver, crash it, die. No, the other way around. Everybody gets it the wrong way around. Learn the skill first, then worry about getting the money, okay? So he said, imagine, because it's a business plan, you will have the 20,000. Okay, so the maximum loss per trade will be 1% of £20,000, which would be £200 per trade. The win-loss ratio, let's say you win just a bit better than a coin, Alpesh. He said, keep it conservative. I went, okay. And we'll pick a strategy where we're adding to our winners, because winners add to winners. So the average loss will be £200, 1% of 20,000. And we'll add to our winners. So because we're adding to our winners, the average win will be a bit more than the average loss. So it'll be £300 will be the average win. Okay. And I said, fine, that makes a lot of sense, right? Let's say we do 100 trades. So we did 100 trades. Then I did the maths. I got the calculator out with Bill. I went, hang on, that's 60 winning trades out of 100, £300 profit on each trade. That's £18,000 profit. I told him, tell my parents, call my parents, Bill, tell them I'm leaving university. I was studying to be a barrister, right? I was at degree and then eventually to be a barrister. I did qualify as a barrister. And the idea was, so a lawyer, for those of you not from the UK. And the idea was, hey, lawyers become millionaires. So you can imagine it'd have to take a lot to want me to stop that. And I said, no, I love this idea of trading. I'd sit at my desk in my underpants all day long, bang the keyboard and make £18,000 for every 100 trades. He said, well, you haven't included the losses. I said, yeah, but even if I have 40 losing trades out of 100, and £8,000 in losses, Bill, I said, that's still net profit of £10,000 per 100 trades. He said, calm down, Alpesh, calm down. Okay. And the reason he said, calm down, I said, no, Bill, I can't calm down. £10,000 per 100 trades is more money than I've ever seen. I said, I'm going to become a day trader. I'll do 100 trades per week. That's 50 weeks in a year. So I'll do 5,000 trades per annum. 5,000 trades per annum at £10,000 per 100 trades, 5,000 trades per annum at £10,000 per 100 trades. That'll make me £500,000 a year, Bill. And I know what you're all thinking. And Bill said the same. Shut up, Alpesh. Don't be stupid. I know what you're thinking. Alpesh, don't be daft. We're not going to do 90% of that. We're not going to do 80% of that. We're not going to do 3/4 of that, 2/3, a half, or even a third, a quarter, a fifth, or 15% of that. Let's say we did 10% of that. That's £50,000. That's £50,000. Hang on. 10% of our business plan is £50,000. But I said our target is 1K per month. So we're being over optimistic. All these figures are too optimistic, Alpesh. Even 10% is over optimistic. Tone it down. And that's what Bill said to me. Tone it down. Keep your day job, Alpesh. Qualify as a barrister. Do trading on the side was his advice. Do 100 trades every 6 months. Not every week, every 6 months. That's one a day. Remember earlier I said start with one a day. One quality trade a day instead of quantity. Most people make the mistake of trying to do quantity. They want to ride that Ferrari down the motorway on day one, crash it and die and say trading's rubbish, right? One quality trade a day. But is that enough money? Is that enough for us? Us greedy people? Is it? Well, it's 200 trades per annum. It's £20,000 per annum. So it's not 10% of the business plan. It's about 4% of the business plan. Well, hang on. 4% of the business plan is still over optimistic because I said it's 1K per annum. 4%, 20,000 per annum is almost still double our target of 1%, of 1,000 per month. So we could afford to tone it right down and hit about 2% of our business plan. If we get 2% right of our business plan, we make $1,000 a month, right? That's how to think about it. How wrong can I afford to be? How bad can I afford to be? But the question then you should ask, which is the same one I asked Bill, is hang on, Bill. If what you're telling me is true, if what you're telling me is right, how come everybody isn't rich? And that's what you should be asking me. And he said the key reasons for failure: bad teachers, bad mentors, bad strategies. So let's now, in the fourth and final part of the webinar, me give you the strategy, the entry strategy, or rather give you the final part of the strategy, because I've given you the other part, stop losses, adding to winners. The entry, how do we know when to enter on a trend? Okay, that's the most important part, right? Because it's not even 100 trades per 6 months giving us £20,000. That's my mum again. It's only 1K per month we're going for. Very conservative. Actually, 500 per month to 1K, because you've got the skill to make 500, you can make 1,000, you can make 1,000, you can make 2. So I said to Bill, let's look at in this part 4 of the webinar, the final part before the Q&A, the entry. How do we know when to enter, when a trend's going to start? After all those billionaire hedge fund managers are trend followers, and we're going to ride their coattails. We're going to ride the coattails of Goldman Sachs. Imagine that's Goldman Sachs. That's us, is what Bill said. He said, you're going to ride their coattails. They're going to move the market, okay? They're going to move the market. We're going to get in at a high probability entry, which is the one there, not the low probability one, which is when it's there, or at the bottom, which is just bottom fishing. You're going to die. I mean, Bill Lipschitz put it in slight odd terms. It's printed in the book. He said, well, the only thing you get with bottom fishing is, I'm not going to say it actually. Anyway, Goldman Sachs, trend following. So I said to Bill, look, I can't afford software subscriptions, monthly, daily, weekly, all the rest of it. So, how am I going to do this? And he said, look, what we'll do is we'll find a strategy where we strip out the expensive bit, but it'll still work well enough for you and make you a return, make you enough money. So what we're going to do is measure how close to the high the price closes in any given period. And I said, why? He goes, well, that's how we measure momentum in a simpler way. What we're going to do is it's like those TV auctions. I got 40, anybody give me 50. I got 50, anybody give me 60. I got 60, anybody give me 70. I said, okay, fine. We're going to measure how close to the high the price closes in any given period, because there's an increased probability it's going to move up. So yeah, but how am I going to do that? With a magnifying glass? And anyway, surely there's many different indicators, many different ways of measuring that. I could look at higher lows, higher highs, or is the price closing near the high? It's too complicated. He said, yes. So what we'll do, because no one indicator works all the time, and you're a poor student who can't afford to buy complicated, expensive subscriptions, we'll do what all hedge funds do. We will look not at one indicator, we'll look at multiple indicators, because that is corroborative evidence. It increases the probability of something being accurate. No one indicator works all the time, so we'll use multiple indicators, but we won't use them the way the textbooks do. And also, that won't be enough to make us any money. What we'll also need to do is look at those indicators across different timeframes to see, is the short-term money and the longer-term money in synchronicity? Therefore, there's a higher probability, write it down, higher probability of a bigger move. Higher probability of a bigger move is all we're looking for. So we'll look at multiple timeframes. And the third thing he said we'll look at is PC. And since then, we've added PR, and I'll explain what all that is, PC and PR is. I said, what the hell? What indicators are we going to look at? He said, well, you don't need to know the formula for the indicators to drive the car. Similarly, you don't need to know that that's one of the indicators which measures is the price closing near the high. You just need to know that it's closing near the high through some depiction. I said, okay, I understand that. So he said, because you're a poor student, you're going to have to use publicly available indicators, but not the way the textbooks do. And they can't be the only things. Otherwise, everybody would be making money. And we're going to filter. We're not going to use one indicator. We're going to do what all hedge funds do, is they filter. They might not use the same indicators. They might have their own proprietary ones, secret ones, but they all filter to make sure that not only one indicator ticks the box, but multiple ones do. So we're going to use ones which are publicly available, he said, but because they're rubbish and don't all work all the time, we'll use multiple indicators, right? Multiple indicators, but not the way the textbooks do. We'll use them to see are they flat to rising, because some of these publicly available ones, they don't work all the time, but they only work some of the time. So we'll make sure we use multiple indicators, and are they flat to rising? In other words, because some of them are lagging and some of them are too premature, we'll take an intermediate stage, which is, are they flat to rising, flat to rising. That will mean that the lagging ones were getting in early enough, and the premature ones have already gone through one cycle of prematurity and getting ready to show another price rise. Multiple indicators, flat to rising, but not just in the time frame you're trading, but in the next time frame along as well. And I said, why the next time frame along? He said the reason is only then can you see that the bigger, longer term money is also following in the same direction as well. Okay, only then. So if you look at this, which I showed earlier, what that is, the reason we get the bigger trend is multiple indicators there. You can see some of them here across multiple time frames. That's the next time frame along, were flat to, in this case, because it's a short trade, falling. But that's not enough to make money. That's not enough. Okay, that is not enough money to make money. Multiple indicators, multiple time frames, and all hedge funds use multiple indicators and triple filtration. You also needed the holy grail, which was PC, price confirmation. The price had to make a 2-period high. Why? Because just because I think there's a trend and multiple indicators are suggesting that, unless Goldman Sachs actually buys into it and pushes it higher, there isn't. Now, they might use different indicators. They use different indicators to me, obviously. They've made Coca-Cola. I've reverse engineered the recipe. It isn't quite Coca-Cola. It tastes a bit like Coca-Cola. That's all it is. It's reverse engineering trends. That's all we've done. It's what anybody does. I don't know their secret Coca-Cola formula, but I've reverse engineered. So, but I need to know that people are buying Coke or people are buying into whatever this product is, and therefore price confirmation. But that's not all. We now use Microsoft's Azure engine to do pattern recognition. We look at the previous 20 periods, okay, and we weigh patterns based on accuracy and based on how far from the entry they are. So if that subset is 20 periods away, it's got lower weight than, let's say, that subset, and that has lower weight than all of that put together. Anyway, you can quickly see why you need a supercomputer. Or Microsoft Azure is phenomenal for artificial intelligence, because we don't need lots of money to do it. We just pay a subscription to Microsoft to use their AI engine. So multiple indicators, multiple time frames, price confirmation, pattern recognition. That's what we use. You're not going to do pattern recognition, but the other rules I've given you. What we did, and I'll show you how to download it if you want, but I've given you the manual rules. I perfected the strategy when I was at University of Red Carnation. That was my exam. Won a competition in the FT using all of that. The Financial Times then said, "You're phenomenal. Would you like to write books on this?" I said, yes, because that'll give me a profile to raise a hedge fund, which is exactly what I did after all of that. Because when you get a profile, you can raise capital, a lot of capital. So we went to Merrill Lynch HSBC, who gave them and a few others gave basically $1 million. I then used that $1 million. You can see me there. Basically, they wanted to co-brand me. So they put my face on the front cover of theirs to say to people, all right, this guy is so shit good, so hot that, this is who you follow. And but anyway, that was $1 million deal. That allowed me to set up the hedge fund. That's me at my first set of offices. I continued writing the diary of an internet trader. The FT said, look, you're good. Why don't you do a weekly diary? And that's what I did. So I asked people, what more do you want beyond what I'm giving you? Especially when we realize there's all this bullshit on the internet, people charging you $2,000, $3,000, $4,000 for trading academies, institutes, and they're doing subscriptions each day, each week, each month, each year. They'll rip you off. They're rubbish. We've looked at all of them. You can put it into the chat box, and I'll give you my opinion on all of them. We have looked at all of them. Not one had our credentials, basically, and they were all charging you fees, and they were no good. And we also worked out that people without an indicator were doing this. They're working really hard, lots of hours in front of the screen. They're becoming screen slaves. Instead of one quality trade a day, just indicated very quickly, very simply, let the algorithm do the bloody hard work. This is Apple. Okay, this is Apple. It's where it is on Apple. Now, you will know that I've got some long-term holdings in Apple. You've been following my webinars, and you will know because my double Apple leverage has been added to, and I'm happy to keep on. No, Carl, you've got to be kidding. That is not a hedge fund. It's not a hedge fund manager. It is somebody who's going to charge you $2,000, $4,000, $50,000. Anybody who says they've got a trading college, a trading institute, a trading university is lying to you for a very simple reason. It clearly isn't a university. A university is Oxford University, is London School of Economics. All right. So once they stick trading in front of it, you know they're trying to pull the wool over their eyes. Ask yourself this: are they an FCA regulated hedge fund manager? If not, why not? Are they too good? No. If you're any good at trading, you will have people finding you and giving you capital. I don't mean private investors. I'm talking about institutions. Our investors in our hedge fund are Aegon and AXA. We can't take retail money for a very simple reason. Hedge funds are not allowed. They're only allowed to take institutional money from family offices. So we have the founder of New Look, Tom Singh. We have the founder of Cobra Beer, Lord Billamoria. Okay, family offices or institutions. All these other people, they're rubbish. They're rubbish. They haven't got a clue. They're going to take $4,000 off you. Then they're going to say, you're not profitable. Oh, you need our platinum experience. That's another 10 grand. In fact, you can put it in the chat box. I won't mention any names, but tell me how much you've given to the likes of the names you're now putting up. Confidence and strategy. So we gave people this indicator, gave them the software, and their confidence and strategy increased. They had lower stress over losses. They knew they had a business plan for profits, clarity of exits, clarity of entries, clarity of stop losses, because it was all there. So I said to my team, I said, look, I want to copy billionaires. In anything I do, I want to copy billionaires, because in my industry, it's about money. And you can give it all away, of course, and God forbid, you can give it all away and you can find a cure for COVID or whatever, do good works with it. And a lot of hedge fund managers do give it all away and do great works, or, but we're not here to talk about charity at the moment. We're here to talk about how to make the money to begin with. So I said to my team, I want to copy Jeff Bezos, because he's a billionaire who spun technology out of his hedge fund D.E. Shaw and created Amazon. So we did that. Okay. Ravindra, email me. No worries. Oh God, no, Richard, you didn't say win trading, did you? Seriously. Pips Predator, we called it. Buy when the price goes above the horizontal line, because multiple indicators across multiple time frames are flat to rising. So we spun this technology out. We want to float it on the stock market. We're going to get venture capital investment into it. Okay. And I'm going to let you have it in a second. Don't worry. The best time frame we found to trade, doesn't mean you shouldn't do the others, was the 1 hour time frame. All right. Yeah, Patrick, I know. Now, 25 trades in a month, typically, there's some months, because one a day, you might do 40. At the moment with COVID, you're going to do a lot more than 25. You're going to do 40 at least. In quiet months, it'll be 16. There's not going to be any quiet months for a long time to come. Net pips captured, that's winning minus losing, roughly 2,250, but big variance. Some months it might be as much as 4,000. And some months, if you have a bad month, it might be as little as 0. What? Might not make any money? What? You mean every single day and everything you touch doesn't touch the gold? Yeah. What happens is some months you make more, some months you make less. What you do is you keep the months in which you make more, the excess for the months in which you make less, you iron it out, and you should be looking to get 500 to 1,000 a month. All right. The best winning streak, 70 winning trades out of 100. Worst, 30 out of 100. Let's say you did $2 a point, whether you're CFD trading or spread betting or futures trading or options, everything can be translated into dollars per point. Okay. Bupendra, no, 1-to-1, they're not hedge fund managers. Okay. All right. I love what I do. That's why I'm energetic about it. I'm passionate about this. I've written 18 odd books on it. Don't buy the books. They're a bit dated now. I'm giving you the best bits in this webinar. I'll give you the URL in a second where to get it for free. The books, the content, one of the books anyway, Investing Unplugged. 2 times 2,250 net pips captured in a month would mean in a month you'd make $4,500. Well, hang on. I said 500 a month is what we're after. When we did this calculation, that's when we realized that private investors could do 20 cents or 20 pence a point. If you can do 20 pence a point, and the brokers which allow you to do that, then you can get the 500 a month. That's mass market, because 20 times the stop loss typical of 50 points means you're only risking £10, all right, on a trade. I'm very happy with people risking only £10 to make their 500 a month. And if you still make 500, you can make 1,000. You can make 1,000, you can make 2,000. So then, actually, it was one of my apprentices, well, one of the people who was in my hedge fund, one of the early people who at Barclays Bank, actually, who was behind us creating all of this, said to me, Alpesh, how can I use all of this technology? And I said, no, this is ours. We're not giving it away to anybody. It's ours. And he said, yeah, but what if you make more money by licensing the technology than just keeping it to yourself? Dyson licenses, and he's a billionaire. Dyson and Jeff Bezos spun out his technology from his hedge fund and created Amazon. Technology, spin out the technology, and I thought, ooh, I like this. Anyway, we discovered all these people you're mentioning, 1-to-1, Seca, Winters. Listen, They're not professionally trained barrister communicators by Bloomberg TV. They're not paid by TV company. Bloomberg pay me, the #1 financial brand, pay me for my show. Financial Times pay me £1 a word for my Diary of an Internet Trader columns. I'm a visiting fellow at Oxford University. I've won awards in the Financial Times. These guys will give you Mrs. Smith from Croydon, Mr. Jones from Manchester. Yeah, really, honestly, come on, guys. It's like people want to be lied to. It's like they want to be deceived by these jokers. Okay, and then we discover we've got no competition. We've got no you can see why we want to float the technology on the stock market, because we've got no competition. We've got zero competition. There's not a single person you can name who's a regulated fund manager who's got institutional capital behind them. So we asked ourselves, well, can it make money? Yes, I'll show you some trades. I'll show you some more in a second. Can you do it anytime with a day job? Yes, because our day job is not sitting in front of a computer screen. Our day job is raising capital from family of 90% of my time is spent raising capital. At the moment, I can't do it because of plumbing COVID. Spent raising capital. It is not sitting in front of a screen, okay, all day and all night, because you can get 17-year-old kids to do that for you, right? I don't need to be sitting in front of a screen doing all of that all the time. Australian dollar, New Zealand dollar, somebody has asked about. I'll show you how to download it in a second. Give me a second. There it is. The Aussie New Zealand dollar. One of my favorite trades. Why? Not because I know anything about Australia or New Zealand, but simply because the trends tend to be smoother, as you can see. And so it allows our algorithm to pick them up. Okay, it's based on multiple indicators, multiple timeframes, and so on. If the trends are smoother, it's easier for the algorithm to do its job. If you give it really difficult, then it's not going to like doing the job on that, okay? Does it make life easier? Hell yes, because we've got simple rules. I'll give you the same manual. So I'll show you how to download it. I just want to show you this one. One of my apprentices, not me, one of my apprentices, okay? Euro dollar, 5-minute bars, over 3 hours, 75 pips, including additional position, 75 times 30. Why such a large position size? Because he's confident, okay? And he's been consistently profitable, $2,250. Won't go through every single one. The person who endorsed it, this is where we blow any competition out of the water. The chairman of the Chicago Board of Trade. You try and get from any one of those other people somebody who's endorsed it like this, right? That's the world's largest exchange. It's in print on the jacket of a Financial Times book, my book, right? This is what he said. Gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies. Methodologies of successful trading strategies. What I've given you, according to the chairman of the Chicago Board of Trade, the world's largest exchange, is methodologies of successful trading strategies. Nobody else gets you trading strategies from hedge funds. They're lying to you. Everyone else is lying to you. All right, because if they had them, they'd be running FCA-regulated hedge funds, and they would be getting the endorsements from hedge fund managers like the chairman of the Chicago Board of Trade, who is a trader. All right, don't need to go into those two. We're going to try and get you from this to this, this to this. That's what our job is. At the moment, this is how people are trading without an indicator. That's why we thought there is a massive, massive opportunity in the market. So we asked people, what do you want? Okay. We asked them, what do you want? And this is what we found. When we asked them, we said, give us your dream of what you want. And they said, well, we want to know when to buy and sell. We want to know the entries. We want alerts. We want them on our phone. We want them not to be screen slaves. We want strategies which will work on Forex, stocks, indices. We want to learn at our own pace, okay? 15 minutes a day before and after work, we want to do it. We want somebody who's going to be there 24/7 for us. We want access to you, Alpesh, but no daily, monthly or weekly or yearly charges, no ongoing costs or hidden fees, no cost for data, no upgrade costs, none of that. We want course materials. So I created a 12-week course for them. They've got it for the whole of their lives, and a 30-day course if they want to become hedge fund managers as well. Okay, if they just want to learn and they're total beginners, do the 12-week one. It's theirs for life. So is access to me. They said, want lifetime access to you, want 30-day money back guarantee on top of it. I asked them all of this. What do you want? We want weekly updates. I actually give them daily now on the Telegram channel. Never mind weekly, daily. Want free upgrades and updates for life. Want it to be perfect for beginners and to me. I mean, bloody hell. We gave them a wish list, as you'd ask anybody, an entire wish list. They said, then we want WhatsApp access to you personally, individually. We want to have that broadcast on Telegram to you. Want one-to-one calls with your mentoring. And I thought, forget it. I don't want to do any of this. They said, we want you to mentor us on our trading plans, give us feedback, cheat sheets, member support as well. We want your team to install it for us. We want weekly live webinars, and we want, with this we put in, okay, as well. And we want to use the same stuff you're using. And the only way this worked for us, and I said
to Barclays solve this problem. So one of their employees, who used to be an employee, he's not there now, but when he was an employee, he found the solution. He said, float the damn thing on the stock market if there's the demand. That's how you become a billionaire. And so what our plan is to take batches of people in groups of 25 to use the algorithm. I'm going to give them signed copies of my 2 most recent books to keep, a trading journal to keep, a pen, also a battery for their phone, all of this kind of extra stuff, okay, to keep just for trying it, because we want to get to 1,000 profitable users. We've got to 850, want to get to 1,000. I take them in batches of 25 because I'm the one doing mentoring. You have me mentoring you for the rest of your life, okay? You know why I can do that and why I say that? It blows the competition out of the water, because we don't charge any daily, weekly, monthly fees. None of the competition will ever do that for you. You know why? Because they know you're not going to be profitable. That's why they need to charge you something every month, every week, because they know you're never going to be profitable, so you're going to keep paying them. I know you're going to be profitable. That's why I don't charge you anything, because what's the point of charging you every month when after a month you're going to say, hey, I'm profitable? Well, I don't need to pay you. Plus, by saying you got access to me for the rest of my life, you know that I must mean that you're going to get profitable, because who wants to put that noose around their neck? That's why. Okay. And you've seen me on the BBC, public figure. This is the same algorithm I use on the BBC. Okay. Same algorithm. I only give it to 25 at a time, and it is the first 25 to sign up. It is first come, first serve. I ask 2 things of people who sign up, and there's the 30-day no quibble money back guarantee. It's 100% money back guarantee. You don't have to send me your trades if you don't want. We've got a separate program if you want to invest, and we've got a separate one if you want to trade. I'm talking about trading at the moment. This is the trading one, okay? And I'll show you how to sign up in a second. Only 25 on each sign up. And the reason for that is I'm doing the mentoring, and you've got me for life and direct access to me. This is the guy from Barclays, when he was at Barclays, Biku, who came up with the whole idea for everything and created it so we could offer it. Because without him, and they're going to do the IPO as well anyway. When we get to 1,000 users, we'll have a 50 million valuation. We're going to take roughly a 30 million investment from venture capitalists. Amazon Ventures, Google Ventures, and SoftBank are the 3 we're talking to, right? That's the plan, and then we IPO it. This is my most successful apprentice. My most successful apprentice isn't Mrs. Jones from Swindon or Mr. Smith from Manchester or an actor, all right? This person, Naomi, left university, joined me as a trading assistant. 3 years later, she's at Newton, and she manages 10 billion pounds. Let me say that again, 10 billion. I'm going to take some credit for that. Okay. That's my most successful student. That's how it works. That's how it works. 25 licenses, high quality mentoring for me. That's why it's limited in numbers. This is where you go to sign up. We used to offer it for free. When we offered it for free, people didn't respect it, because nobody respects anything for free. And if you want to see how bloody good it is, that's a live trade. That is Australian dollar, New Zealand dollar. Go check it now if you want on the internet. We've got another buy signal. We have one there. Got another one telling us go long, and those signals, and we had that. So that in itself, you guys are clearly good luck for me, because as you can see, boom, it's still going up and up and up. Now, I've already told you, not every trade's winning. That's not the point. Our strategy is set up for it in a way that we're covered either way. Okay, I'm going to put this on screen. I'm going to publish it. I want to take people on to join us. I want people who join also to get free shares in the company. That's what the lawyers are working on. There shouldn't be a problem, but lawyers have to do all sorts of other little things to make that happen. All right. That's where you sign up. First come, first serve is what you're getting. And we've got everybody from husbands and wives doing it together to parents getting it for their children because they've got access to me and career advice. I'm going to show you something amazing now. I want to show you this, right? When you go to alpeshpatel.com/here, right? Yes, it works on Mac, and because I use it on Mac, and we'll install it for you if it takes more than 10 minutes. So don't worry. We've got 24/7 support, live person. And actually, we've got a big team. 30-day money-back guarantee on this. So if for any reason you're not happy, you still keep the books, still keep the trading journal, you still keep the pipspredator pen, the pipspredator torch, which is there to help you find profits, the pipspredator USB with all the material on it. You got to keep all of that just for trying it. This is the webinar special. It is soon going to be £5,000. Why? Because through COVID, we've monitored the returns people are making, and we think it's only fair that we raise the price. That's why. Okay. Yeah, you can start on a live account if you want. I recommend people learn on a demo account. That's not a problem. Okay. You can start on a live account straight away if you wish. Not an issue. I have no issues with it. It's just that I don't want people
going crazy. That's all. Chin. So don't worry. You can start on a live one if you wish, but only ever trade with risk capital is what I'd say, right? Oh, by the way, padlock means all your data is secure. When you click on add to cart, there's VAT if you're in the UK or the EU. When you click on add to cart, you've got choice of PayPal. Some people say, I want PayPal, I want extra to go. If you're paying by American Express, you've got to go through PayPal. You don't actually need a PayPal account to use PayPal. MasterCard, Visa is the other alternative as well. Okay, 30-day money back guarantee. Just email me if you're not satisfied. Only 10% give up within the first 30 days and say, hey, trading's not for me. At least you will have learned whether or not it's for you. Okay, it's as simple as that. One of the things I want to show you is our amazing mentoring site. I want to show you the amazing mentoring site. Okay, we have got and created what I think is an absolutely brilliant mentoring site. Oh, I better let that. Oh, and we've got a separate investment program. I'll let you know what that one is in a second. Let me just go there because I haven't told people. I've covered up the page now. There we go, Louise. That's where it is. There you go. Okay. This mentoring site is phenomenal. I'll tell you why. Through this, you will see that we've got quite a big, ever-expanding team. When you look at support team, it also allows you to get direct access to me. As an apprentice, you call me, we set up calls, we go through your trades. Not only that, you've got people to help you install. And we've now got a fellow hedge fund manager who's co-authored my books with me, who's also going to be available as well as me. But I'm your mentor. Okay, and as a mentor, if you've got problems with brokers, you speak to me. If you've got issues, want advice on career in finance, you speak to me. You're going to have direct WhatsApp access to me now as well. You can see why it's going to be 5,000 soon, which I know sounds extortionate, but it's not that at the moment. And the reason we've upped it is just because people are making crazy sums, and it's unfair that we are not charging the right amounts, and people are saying you're giving it away. Now look at that. That's Facebook. That's what just shot up. That's where we were. And can you also see why stop losses are stepped? Notice, right? So now it's gone there. The stop loss from here can move up to here. Okay, and even better, we can double our position on that. That's Facebook. I'm not saying you necessarily do equities, okay, because there's a lot of different things to trade. And what we do is we'll also do the business plan with you. We'll also do the 12. I'll show you the 12-week course in a second. It is phenomenal, if I say so myself. And the reason it is, there's the 30-day and a 12-week course. You've got it. It's yours for life, as is the mentoring and access to me through WhatsApp and Telegram and all the rest of it. And I'll give you the free channels in a second. Chin, I've got a lot of people based out of India. Actually, recently there's been a spike up. If you're trading Forex, it's there. You only need to be trading. Look, what you buy and what you sell doesn't matter whether it's Forex or Morgan Stanley or Dow, because money's money. Buying and selling. I don't care. When I go buy Starbucks, the lady behind the desk doesn't say to me, behind the counter, doesn't say what you earn your money in. So yeah, we've got quite a few on trading out of India, and we show them exactly the same stuff. We want them trading the same products that the rest of the market is, because that's where the returns are. So what we do with this is, through this course curriculum, you're going to get all the updates. You get the Goldman Sachs slides, and as soon as we've got the data, you get it. Okay, it's as good as that. Not only that, my monthly newsletter, you get daily updates on Telegram. I mean, it's more stuff than you could ever want. And the reason for it is, it's really simple. As a hedge fund, we've got access to a lot of data, which we then simplify, like I have done in this webinar, and give it to people. All right. There's a lot of stuff. So I want to thank the people. Barry, I want to thank you. Donald, I want to thank you. Ashwin, I want to thank you. Mickey, yeah, it's gone through. By the way, as you sign up, let me know so I can give you a shout out as well. And this is phenomenal. We also now have started sharing the information on which all of this is available as well, on what we did. Chet, thank you very much. Welcome on board. Delighted to have you on board, my friend. And then each week, very structured. I take you through any point you've got any questions, and we've got a community site that we've built as well around this. So you can ask questions on there. You'll see other questions other people have asked, and I answer them. Okay, we don't fob this off to some underling. I never say to people, oh yeah, come on. And then I'll just give you, oh, let me introduce you to Terry. Terry's the one who actually does the mentoring. No, I do it. That's why it's limited in numbers, because I have a huge incentive to get you to profitability. When I get 1,000 people to profitability, the valuation of the whole company is at $50 million US. You're making me capital as well as for yourself. And then when we float it, that's the channel. I'll show you what our plans are. So anyway, all very structured, all updated every single day at the moment. I'm not saying every day, it will always be updated daily, because that's a lot, but updated daily. And you get a certificate of completion from a hedge fund manager. And guess what the advantage of that is? To get a certificate of completion. Well, if you're looking for a new career, you're going to have me as your mentor. Okay, and you'll be able to say as your referee on your CV. And a lot of people have started loving that part of it. Okay, they've said we love that part of it. By the way, I'll show you the investing side in a second, in case you're not into the trading, but you're into the investing stuff instead. I'll show you that. That's completely separate. It's a completely separate program. But what I want to show you is how we've been mentoring people. Okay, one of the ways in which I've been mentoring people is they will send me their trades as well as calls. They'll send me their trades and I will do a video for them, just one-to-one. So it's as if I'm looking over their shoulder. But because they're seeing what I'm doing, they're looking over my shoulder as well. And all this experience and expertise they're getting as well. So we did a comparison with everyone else. This is what you do. Ravinder, the best email to use for me is, I'm going to put it on there. If you've got a question, alpeshpatel@tradermind.com. Only apprentices get access to Barry. Only apprentices get access to my WhatsApp. You're an apprentice, so you get access to that. So I can instant message. And people go, how do you find the time? Remember, I'm only taking people on 25 at a time to make them profitable. Then my job, yes, if you want to become a hedge fund manager, I will show you how to raise capital from family offices and the like. We had no competition. Even people who we found were people who claimed they were hedge fund managers. We look on the FCA register and they're not. We've got a community site which shows our latest views, what mentoring, lots and lots of mentoring advice, to search desk on there, so you can search things, or you just ask me. Okay, so for instance, we did this last week on one of the updates before the Easter break, and we'll show you what we're looking at. These aren't historic trades. Well, they're not just historic trades. They're also showing you what we're waiting for the next signal on. So you can set up your screen to do the same, or you just pick based on what you're interested in and happy with as well, based on this. And we'll instruct you and give suggestions and say to you, hey, that's set up right. No, that's set up wrong. You should look to do this. You should look to do that. We'll also tell you what to switch into. And the beauty of the community site and also the search function is you're always learning. You don't have to wait for me in a particular classroom. You're constantly learning. You're constantly learning at the same time as well. And that's one of the key advantages of that. The bonuses I'm going to show you that I give you, just as a reminder, somebody's asked, what are the bonuses? We've estimated the total value of this is about $30,000. Now, you might say, how the hell have you come up with that figure? All right, well, with hard data and numbers again. First of all, you got lifetime mentoring from a hedge fund manager, 12-week online trading course, but you can take your time over it, and I go through it with you, okay? So don't worry, you got me all the way along through it. You've got the 30-day course, which is, if you're a total beginner, you don't understand, you do that, right, as well, and it's included. You got WhatsApp access to me rest of my life. Yeah, I think that's worth $10,000. Ask my mom. Telegram broadcast. You saw some of the stuff. As soon as I'm buying something, I'll tell you what I'm getting into and what I like and all the rest of it. One-to-one calls, trading plans, feedback from me, trading cheat sheets, priority support, all of that, all in there as well. All right. What I want to also show you is, if those of you are not into trading, and that was the trading part, if you like the first part of the webinar and you want investing, okay, have a look at this. alpeshpatel.com/shares. That's investing. There's a coupon for 10% off for the investing. This is not pipspredator. This is investing, right? And investing is completely separate. Investing is completely different. Software is completely different. Those of you interested in investing, this is what you'd look at. Okay. Oh, we've had a whole bunch. Marcus, thank you very much. We've got Vincent, thank you. I want to thank Ross, and who else have I got? Just clicking through. Deepak, it has gone through. Tony, it's gone through as well. Bhaskar, it's gone through. as well. Good. You're through. You should be through to the download page, actually, William. As soon as it goes through, Mohammed, it's gone through. You should get a download page. There's just a lot of people. It might have clogged the system. That's why your transaction might not be going through, or go through the PayPal. Let me know as soon as you've signed up. Anybody else, let me know as well. So this is the investing. It's completely separate software mentoring and program. We paralleled it with the trading side, but the software is very different because it's obviously fundamentals, cash flow, Croaky, Altman, all of that kind of stuff. And this is the webinar only offer, 1010. It won't last after the webinar. All right, so it's only for webinar users. Go there. Also, for all that material that I promised you, the slides, the little video bits at the front that I said, all of you, go to alpeshpatel.com/shares. You will see, without signing up, without paying, you'll have access to a couple of the lectures. Those are the ones that I've just loaded up those slides on from earlier on. All right, so go there. Okay, you'll find it. For the free public Telegram channel, sorry, it's all in different places. Go to pipspredator.com and then the useful links page, and you will find the free public Telegram channel. Okay, not the private premium platinum one for my apprentices, but the free public one, pipspredator.com. I'll put it here, and useful links. Okay, so that's what all of you need to go to, pipspredator.com, and then go to useful links for the free public Telegram channel. You'll see the link, Telegram broadcasts. All right, and yeah, VAT, if you're in the UK or the EU, I'm afraid VAT is chargeable and I have to charge it. I'm sorry to say, because we have to pass it to the tax man. There is one good thing about being charged. Well, if you've got a company, VAT would be reclaimable by you as a business expense. But separately from that, there is one good piece of news. It'll be helping out our NHS at the moment if you're paying VAT, because it all goes to the tax man. And I think consider it your donation to COVID. That's how I look at it when we've got to pay VAT. I'm thinking, you know what? It's the first time I'm actually pleased to be paying the tax. The Dow, you want me to talk about the Dow? Sorry, let me put that up. Sorry, let me put up the Dow. Dow. Oh, there you go. There's the Dow one. Let me scroll that back a bit. Where are we? 23,847. Yeah, that was from 23, I don't know, what is that? 23,400. So that is a 300-point rise, 200 to 300-point rise. We are still in it. No, we're still in it. Chetan, we are still in the Dow trade, just to be absolutely clear. Louise, I know you have. Louise has Louise often, those of you who've been on my webinars will know, very often Louise will, she's an apprentice, so it's okay, will copy the trades that I've been looking at and doing, and that's exactly what she's done today. Metro Bank, yes, I haven't mentioned them for a while, and they are on the screen, well spotted. I will tell you what we've got on Metro Bank. We have got this on Metro Bank. That's where it stands, and a massive move up, which again, I should tell you how trend following actually works. Let me tell you what actually happens with trends. We don't know at this stage that it's going to shoot up because we don't see into the future. What we know is that multiple indicators, multiple timeframes, things are set up to explode. Now, they're only going to explode if a Goldman Sachs or somebody looks at this and says, yeah, I think we want to get in, right? That's what causes the markets to rise, not because we've got the ability to see into the future. The other thing I want to tell you is this. Any decent strategy should be such that you've got ample time to enter. In other words, the price is near the entry for a long period of time. You don't need to be in front of the screen. You don't need alerts because, look, there's ample time where the price was near the entry and you can get in at any one of those points, okay? If you go to the computer screen, it's fallen below it, I'll probably say no, leave it, get back in when it's gone above it. But if it's gapped above it, well, if you've missed a trade, you've missed a trade. That's fine. Life happens. You miss trades. That's why we look at so many instruments and you move on to the next one. And that's perfectly fine as well. Somebody asked, you told your sister to get into Disney. Sorry, let me look at that message. How is Disney at the moment? That's a bloody good question. Let me find the bloody Disney one. Pull up Disney. I think I had Disney in earlier. Yes, I did have Disney in earlier. There it is. That's the Disney. It's a long. Well, there was a short which went nowhere, and then the long trade we got signaled, and it's gone up. So Ethereum USD is Ethereum crypto. You don't have to do crypto as well. You don't have to do crypto if you don't want. That's for the investing, by the way. If you're signing up for investing, let me know, and I'll give you a shout out for the investing side as well. Yes, Don, there'll be a replay. It's exactly the same URL you used to sign up to this. You should also get an email for the replay as well. That was the plan. You got billionaires, copy them, take on apprentices. This is dropout versus profitability over a 4-week period. We get one dropout in the first week, second week, third week, fourth week. About 25% are profitable straight away because they know how to trade. They download the indicator, they get on with it. The ones who are total beginners, it might take them up to 12 weeks before they get up to there. Okay, and about 10% dropout. Those are the, you know, I like data and I like, does stop loss move multiple times with long trades? No, Alan, you move it. We tell you where it is. You then set it. Either you want it fixed or you want to trail it. So let me give you an example, Alan. We're not moving it. You place the trade. In the same way, we don't move our signal as the trade moves. You decide. You place the entry once you get the signal, is what I'm trying to say. I want to try and find an easy one to illustrate the point. Yeah, I think euro pound is a good one to illustrate that point. So here we go. When that entry signal happened, that happened. We don't then move that entry signal along because it's happened. We'll have to wait until another opportunity comes or you look at a different product. And that stop loss is not where it is. I mean, you're not going to sell short now because you should have done it. It's from the entry point is where the stop loss is, okay? So you've missed this trade is my point because you could have got in at any point while the price was near the entry. If now you look at euro sterling, you don't get in now because obviously it's already all the way down here. You know, it's too late. You've missed the trade. That's fine. It's fine to miss a trade. You look on the next one. Hopefully that makes sense, yeah? The stop loss is based not on right now, it's based on when the signal came. And if you've missed the signal because you weren't at the computer screen, let's look at another example just to make this point absolutely clear. Brilliant point, by the way. Okay. Bhupendra, good. System is causing problems that cannot register. Oh, Nick, Kinsley, let me know. Try the PayPal link as well. Otherwise, I'm holding a place for you, Kinsley. I'm holding a place for you. Try again. Okay, now what have we got? What have we got? I think there's still a couple. Kevin, I think there's still a couple of places left. Hopefully, all right, for you, Kingsley. I'm holding one for you, but try PayPal as opposed to if there's too much traffic, and if that's the problem. Okay, whoops. I was just going to show you that again. Actually, you're the first time anybody's ever asked that about the stop loss, funnily enough. There we go. Right, so let's take this position. Let's take this position for you just so we know, right? That's when the signal was. Now, let's say you missed that, and that's what it's stop loss. Let's say you missed that and you come to the computer now. Well, obviously, you've missed that trade because that's the signal. And that's the stop loss originally, which would have been steps. So you wouldn't place the trade here and put the stop loss down here because you've missed the trade. All right? They might say, well, Alpesh, I missed the bloody trade. That's fine because our whole process is there's lots of trades we miss every second of the day. I missed a million trades while I was on the webinar with you. What we do is we scan the markets 15 minutes a day before and after work. You open each one of the windows. You find one quality trade a day, one quality over quality over quantity. Not sure how to join investing. Went to the site. It says register. Yeah, what you do. Oh, let me go. Okay, for those interested in investing, let me show you. So you go to alpeshpatel.com/shares. Let me just do that. Okay, let me just. Where's it gone? Bum. He can't do it. My computer's going crazy as well. All right. New incognito window. That's easier how to do it. Right. Here we go. So if you're trying to do the shares one, you got an issue. www.alpeshpatel.com/shares. Okay. You go there. This is for the investing one, remember. You go there. All right. Join now. Okay. Enroll. If there's any problem, sometimes this enroll button's a bit sticky. All right, sure. Oh, there you go. No, it's not. Right, there you go. Add coupon. So you add in 10. All right, apply. There you go. Knocks off 10%. And then you go down here. You add in name, address.
There you go. This is the investing course. Investing course. All right. It's as simple as that. Simple as that. That's the investing course. That's how you do it. No, Badrinath, I'll check. Oh, you got an error. Okay, I'll check that your payment has gone through. Give me a second. Badrinath, let me know which one was it. Trading or investing? Was it trading or investing? Just let me know. Shouldn't be an error. I'll check now. And did you use PayPal or not? We'll get the thing is, because of social isolation, there isn't anybody else in the office, obviously. Also, I want to show you this. This is how I train people. We'll put the business plan together with you guys. We're going to practice and test on this. It's going to be an exam for you. If you want to take it with a certificate, if you want to do it, I'll track your performance. There's the 12-week course, 30-day course. I'll benchmark you to make sure you're doing it right and you've got it for life. I want to show you that because I want people to know that Bhupendra, yours did go through. So I've definitely got yours. Badrinath, I'll just check yours, my friend. Lana, it starts completely from the beginning, and I walk people through it, so don't worry. You've got total access to me as well. Badrinath, I don't think it went through. If you got an error, it means your credit card company might have rejected it. Steve, I've got yours, just so you know. John, I've got yours. Check, I've got yours as well. Okay, just so you all know. Got it. Badrinath, it's software, mentoring. It's a whole program. It's not just a course. It is, so I don't want people to be confused. The investing one, it is software. There is courses as well. There is live trading updates. There's signals. There is Telegram. There is WhatsApp. So it's not just a course, because course, who the hell wants to pay for a course, man? There is course for training, but there's software included. There are the same websites that I have. There is trading signals from me. There is mentoring. There's all of those, just so you know. Okay. Not sure whether payment gone. And also, Badrinath, let me know which URL you use. Just type it. Which URL did you use? Was it alpeshpatel.com/go or was it alpeshpatel.com/shares? Let me know which one it was. So just so you know, once you download, you'll be able to download the software and use the same one as me, the same software as me. Okay, you will be able to use everything that I use. All right, just so you know. And you get the mentoring from me, you'll get the broadcast from me, you'll get the WhatsApp access to me, and you'll get what we're buying and selling as well. All right. So, and for those who want to be trained up, you'll get the course material as well. All right. Yeah, but that was alpeshpatel.com/go. What I want you to do is, and for anybody else who's having problems, I think there's 2 or 3 of you, and I'm holding a place for you, but they're going to be gone soon. When you go to alpeshpatel.com/go. Oh, sorry, not go. Sorry, there's so many URLs, everyone. When you go to alpeshpatel/here, okay, and you go here, what I'd like you to do is just try go through there. Go through PayPal. Might be easier. Because for whatever reason, security might have blocked your MasterCard or Visa. Okay, so this is the trading course, Pips Predator. Go through PayPal or Visa. Badrinath, the course you do in your own time, take as long as you want, because I'm always there with you. So you might say, I want to start it next week, Alpesh. That's fine. It's the course material you do in your own time. And whenever you've got a question on it, you come to me and we have calls and you send me your trades as well. And we have one-to-one as well. So the course isn't like this where you're sitting on webinars, although there are live webinars as well. They're on Saturdays and they're recorded. So you don't have to be there 11 a.m., 12 o'clock, 1 o'clock, 2 o'clock, 3 o'clock, and 4 o'clock. There's ones on 11 at stop losses, 12 at entries, 1 o'clock on stop losses, entries, limit orders, 2 o'clock on money management, 3 o'clock on trading psychology, and 4 o'clock on adding to winners. That's on Saturdays, but you can do it in your own time. The course is available to you 24/7. Thank you, Richard. I'm delighted you love it. And it's in your time. That's the whole benefit of it. You don't have to be, it's one-to-one. You don't have to be in the classroom with 30 odd people at a specific time, because you do it, say, because I've got people from around the world. I've got people in Australia, and they might message me and say, oh, Alpesh, I didn't quite get this. I didn't quite understand this.
What about this? What about that? That's the whole point of it. We do it in a way where you can learn in your own time, and all of it starts from the beginning. You're not joining anything midway. Okay, I would say the minimum Bhupendra to start trading is $1,000, and the reason for that is that's what we start our traders on in my office. We start them with $1,000, and the reason we start them on $1,000, and we monitor all of you. Please note investment name. Okay, Svetlana, I've noticed that. I know you're trying to get the Santander. Sometimes Santander, for some reason, do that. Do call the bank because they'll have extra security. Actually, we have extra security to make sure as well. Sent me a link and I've live registered. Badrinath sent me a link. I've registered. Good. My name is Navin Kumar. Okay, Navin, I'll make sure that it's gone through as well. Yeah, so just to explain, and Badrinath, by the way, here's the beauty. We're going to have a one-to-one call. It's part of our onboarding process where I'll explain everything to you one-to-one as well, and that'll make things easier for you as well, my friend. So I don't want you at any point to think, oh, I'm confused. Is it a classroom I've got to attend? Yeah, there's course material, but we found that people learn better in their own time and have the ability to ask me questions if there are any questions and say, oh, Alpesh, I didn't quite understand this. I didn't quite understand that. And we discovered that was a far better way as well. Yeah, Naveen, I've got it. Can I just ask, are you from Hounslow? The same Naveen. I'm assuming there's not more than one Naveen. If you're from Hounslow, it's the same one. Okay, I won't give any more details. I've got confirmation. Oh, brilliant. Badrinath, it's gone through, so that's good. Bhupendra, I'll go through a business plan with each of the apprentices individually. So even if they're starting with $1,000, I started with £1,000. That was it when I was a student. The reason is when I was consistently profitable, guess what? I had people throwing capital at me to say, please do this with us. Feltham, TW46JQ. Just want to make sure I've got the same one. Otherwise, by coincidence, we've got two. Yeah, you must be the one. You must be the one because Feltham and Hounslow is all the same. Yes, perfect. I think we've got. I think we might have. I don't know. We might have run out. I'll try and hold it. Can the software be loaded on? What's the spec? I love that. Bhupendra's asked a brilliant question. How many computers? Bhupendra, you'll be pleased to know we don't mess around. You can put it on a second computer or even a third one if you need to. Some people say I need it at work and I need it on my laptop, on my desktop. That's fine. Some say, can my son and I do it? And I go, okay. I mean, I'd rather you had a separate license for them because it's hard to. Yes, I'm using Badrinath Weblink. Fine, great. What's the spec of the computer? Actually, this is the great thing about it. Because it's light on your end, if you've got a computer which is at least you bought in the last 5-6 years, it'll be fine. So if you've got something which is 10 years old, all right. But if it's 5, 6, 7, 8-year-old computer, it'll be fine. We've got people with 8-year-old computers and they're perfectly fine on this. We do this monitoring. So if we don't get a gold star from you each week, we chase you up. On WhatsApp, some people, they'll send me their trading results like this. Others will send me screenshots. I'll then talk to them over it as well. We're about to launch this, I think today, it's separate, where we're going to try and send you on right onto your phone what we're looking at, what entries and exits. That's not launched yet. That bit's not launched yet. Okay. This is what we found. People wanted a side income, certainly through coronavirus, it's really brought it home. Oh, given the markets are going through the roof, I think I better show you what's happening. What the hell? Okay, Google. You'll have seen you didn't have much chance to get into that before it's rocketed up. It is going through the roof. Don't know what Mr. Trump has just announced, but you can see, and I'm assuming the Dow is, yeah, it is. You guys are lucky. Listen, I'm going to have to end this webinar, go back to my apprentices, because you can see what's happened with the Dow over there. That has now shot up since we even last looked at it. Okay, so that's been going up and up and up, and you can see, yeah, Apple is also boom, 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 boom. Well, I'm happy about that because I told you at the start of the webinar on the investing side, we're looking at double leverage Apple. On this, we're just that. Lana, I'm not clear how it works in practice, i.e. how it actually starts. Also, is it 90 days from pay or actual investing time? So, Lana, the way it works is this. When you sign up, you've got access to me, all the course material, and access to me as your teacher for life. Okay, you've got a 30-day money-back guarantee on the trading, and there's a 7-day money-back guarantee on the investing side. All right, it has course materials, it has software. Both things have software and course materials. You've got it for life. I mentor and advise you. I teach you through those lectures. Each lecture has material from me on there. If there's any questions, you just ask me. I update it every day and every week as well. That's how it works. So in a way, there's live tuition, there's also recorded lessons, and there is, after a recorded lesson, you and I, if you want, having Q&A, emails, recordings as well. It's got the best of all worlds. Now, some people say to me, Alpesh, I don't want to learn anything. Just give me the software, leave me alone. Others say, I want you to teach me one-to-one. That's how it works. You don't have to be in a classroom at any given time. Okay, you can be in the classroom anytime you want because you've always got access to me in the materials. Blackstone, it will fall today, but market all green. Oh, Buttermouth, email me so I can understand it better. It's difficult to understand what you're saying on the on that. It was a bit difficult. And Lana, email me as well if you've got any issues, because I can explain it as well. Please note investor name Svetlana. Yeah, no, I'll do that. Lana. So so hopefully that makes sense. What you've got is everything that I've mentioned that you've seen on screen, the course material and everything else, in your own time, all the time, for life. It's not that it starts today. It starts obviously as soon as you've paid, it starts. But you might say, actually, Alpesh, I'm not going to go through anything until next week. That's up to you because you've got me for life. And oh, Disney, you just asked me about Disney because sister's going to be happy. That's Disney. That is a 5% rise in what? Since the signal on Friday. That's not bad. 5% in 5 days. Okay. Lana, yes, that's there as well. Yes. No. Lana, you don't do the selection. We show you what we like. Yes, Lana, you're right. You don't do the selection. So, that's a brilliant question. So Lana's asked me on the investing side, she said, are you teaching us basically how to find shares, or are you telling us which ones you like? No, I do both. I tell you which ones I like, but also for those who want to learn and be fund managers, I also show you how you can find them for yourself. Now, some people say, I don't want to find them for myself. Just tell me what the hell you like and what you're buying. Yeah, I do that as well. Okay, because some people, it's a bit like a pyramid. Some say, I just want the simplicity, Alpesh. I just want the simplicity. Just give me names. Okay, we do that. Others say, no. I want to learn through the software you're using how to do it. We do that as well. And others say, no, I want a PhD. Tell me the formula so I can create my own ones and get a PhD. We do that as well. So it's everything. No, Lana, you don't have to go through any material. You don't have to go through any material. I should say, Lana, we have half of the apprentices are over 60. Half are under 60, half are over 60. We've got a lot of people who are retired, and they say, I don't want to go through lots and lots of material. I don't want to study all of this. You don't have to study anything. The whole point is, if you turn up, so we have an onboarding form, and you say to me, Alpesh, I want light touch. Don't tell me to read all of this stuff. I just want to know what you like the look of. Then we'll say, hey, that's simple. Let's set up your Telegram channel. And if you want, we'll set up the software so you can look at it if you want. And the Telegram channel so you can see what I'm doing. Others will say, hey, Alpesh, I want to read and learn everything. That's fine. I shouldn't have emphasized the course material so much. We never used to emphasize it so much. You don't have to. You can just pick and choose. You can say, Alpesh, I only want to hear from you. I want the broadcast on my phone, in text or video. That's it. I want to read and learn and get a PhD in trading. Are you kidding me, Alpesh? I don't want all that. That's fine. You don't have to do. That's why we say the course material, you don't have to do. You can just, we set it up the way you want. Some say, just give me the WhatsApp, give me the Telegram on my phone or on my computer, my desktop. I just want to read what you're reading, pick what you like. That's it. Others say, I want to learn everything. That's why it's a one-stop shop for everybody. Hope that makes sense. It's a one-stop shop for absolutely everybody of all natures. I've probably overemphasized the course material just because I love teaching. You know, I want everybody to be learn. But some say, no. Alpesh, today you posted this. I like that. That's what I'm doing. Like my sister, she don't want to learn any course. She just said to me, I want to learn, we want to save for the SIP and ISA allowance for my nephews and nieces' school fees. And I said, well, here's what I would do. I'm not a financial advisor to them, but I said, this is what I would do, given that they're my nephews and nieces. So treat it as if it's my own investments that I'm making. And I said, this is what I bought for the long term for my son. Now, some people might say, no, I want really high risk stuff. And I'll say, look, I don't recommend it, but here's the high risk stuff. Which should only be used, and I give all the risk warnings for risk capital. Speak to a financial advisor suitable for your own case, and if you want the really crazy high risk octane stuff. But it all depends what the stuff is. So we do it in both ways. Exactly, Lana. Yeah. So you get it. You're not going to use the software. You're not going to use the course. That's fine. You're going to use the technology. The app. The messaging, and which will say, this is what I'm investing in, this is what I'm holding for 2 to 3 years. Okay, this is what would fit that profile. So yes, you're exactly right. In Nubian stocks, oh yeah, Badrinath said I'm just 2 weeks new into stocks. Absolutely. That now, if you're totally new into stocks but you want to learn, then you might look at the course material. Otherwise, you might equally say, nah, forget it, Alpesh. Just point me to the right broker, what to buy when you're buying it. Fine, we do it that light touch as well, because some people want that. They just say, so don't worry. It was geared towards beginner, intermediate, and advanced. I've got people on here who are financial advisors. I've got people who are hedge fund managers on here. Okay, and you might think, well, surely they know it all. No, guess what? In every industry, there are people who teach other people. I'm in that industry where I lecture and teach fellow professionals. Lawyers teach other lawyers. Surgeons teach other surgeons. It's the same way. But also, I teach people who are 18. I've got 18-year-olds on here. I've got one person who's 90. Okay, God bless them. So we get the. Lana said, what if, God forbid, you are not actioned for whatever reason? We've actually got a fellow hedge fund co-founder who knows everything that I know and who also co-authored my books. And he would take up the provision of everything for some reason I'm not available. So don't worry about that. Let's say I fell under a bus tomorrow morning. It's a valid question. Then he would take up everything. So don't worry. And the reason that's a really good question, Lana, is because as a hedge fund, we have to make contingency plans. Basically, who is our locum? It's called a locum from the medical. Who will be my locum if something happened to me? And Paresh would be the locum. So we have a locum. So don't worry about that. Okay. This is our future roadmap, everybody, which is this. Venture capital investment, 1,000 profitable apprentices, 30 million is what we want to get. Well, 30 to 50 million is the ballpark. We've hired somebody from a private equity firm called Hamilton Lane, ex-Hamilton Lane, who's going to do the funding for us. Global expansion, these are the dates. Okay. Unicorn means $1 billion company. Some of the ways in which I mentor people and give advice if they want it. Some don't. Lana, I suspect you won't. When we go through the onboarding, you'll say, I don't want to go to your webinars. I don't want your daily news emails. I don't want your weekly trades. I don't want any of that. What you will actually want, Lana, is that one. You'll want just access to what do you like, when do you like it, why do you like it? Boom. That's it. A bit more like a newsletter service, okay? Whereas others are more like a fund manager service. So we've got everything built in there, and you can communicate with me in any event, okay? Listen, guys, I'm going to have to go because I've got a whole bunch of people on the other side that I've got to cater to. So thank you, everybody who's signed up. Thank you, all my apprentices. I want to make sure that I think everybody who wants to be on is on. I want to make sure if there's anybody I've missed, let me know. If there's anybody, I think, Lana, you're the only one. We're holding one place out for you on that one. The Apple stuff is still, rip-roaring ahead. I don't know what Donald Trump said, but that's my point. I don't want to be watching the news all the time. Just want to get on the back of something, and that's it. I don't want to be watching the news on what Trump's saying and trying to second guess the market. I want to follow the trend instead. And that's what this is about. It is about following those accurate and correct trends instead. Okay. So I want to thank all the apprentices who came on board. whether it's this little billionaire or that little billionaire. The point is that I want to thank them all for being on board. And Kingsley was the one. Kingsley's the one. Kingsley, drop me an email. I'm holding that place for you. Just let me know. And Lana, I'm holding a place for you. Oh, yes, absolutely, Lana. Now, I should say, it's subject to lawyers. I don't see a problem with the lawyers saying that all apprentices get free shares. I don't see a problem with that. But I've got to make clear that that's the plan, that I want all apprentices to have shares in the IPO when that happens. Google is absolutely, you guys, I'm not going to give a share of the profits to you guys, but my God, there you go. That's the Google trade. And that is up, 50 points, which, well, you can do the maths on whatever you want to trade on that. Google's just going through the roof over there. I better go because there's quite a few open trades and I am the only one in the office. So the Dow, I'm going to leave you with the Dow trade. Okay, guys. So, oops, I've got to remove that out of the screen. There we go. You can see it better now. Yeah, and I mean, you can see the strength of that conviction. Yeah, so we're definitely in it, and we're in it good and strong and long and all the rest of it. You are so maybe interested. Okay, Ravindra, no problem. Johnny, I will double check that we have got it. It is going to be 5,000 soon. And the reason for that massive leap up is we've taken advice from corporate financiers and basically they think we're giving this away, given how much access people are getting to me and given our future ambitions and plans. Once we get past the 1,000 apprentices, there'll be other mentors. You'll always have me for life, but after 1,000 apprentices, I won't be taking on any new ones, I should say. I will take on no new ones after we get past 1,000, just so you know. I will not be taking on any new ones. Johnny, I will double check we've got yours. And the price will be, I don't know when we're going to put the price up. We just put it up 2 days ago. So I don't know when we're going to do another rise, but it will be soon, I'm afraid, because in this market, as you can see, I'm getting messages from people that they're making thousands and thousands, and it's not fair, I don't think, that we are basically giving stuff away. Mr. Johnny, are you? Let me just check. Johnny, let me just check on you. Jonathan, is it Jonathan? Are you HA8? HA8, is that your postcode, Edgeware? Just let me know because I'll double check. By the way, all apprentices, you're about to get an email from me with all the login details and everything again. So you're about to get that again, okay? You will get all of that. Listen, I really better go now because it's been over 2 hours and I love giving lots of value. Hope you all found it useful. So thank you all. It starts as soon as you've made the payment. It starts immediately. Badrinath asked, what's the start date? Badrinath, each individual apprentice starts individually. The start date is now. If you say to me, can I start tomorrow? Yeah, because it's one-to-one. It's like Oxford University. It's one-to-one tutorials. Okay. Yep, got it. Johnny, HA8. Yeah, HA8, that's you. Got it. We got it. So I'm going to make sure you've all got the download page and the link. So Badrinath, you've paid, I think. That's it. It's your personalized, individualized start date today because you paid today. If you want to, let's say you're busy. So what I'm saying to you is it's not like 5 minutes from now I say, right, Badrinath, get online now. You might say to me, Alpesh, I'm busy today. I'm going to do a bit of work tomorrow. That's fine. Do you see what I'm saying? You have got access to everything right now. You might decide, because you've got access to absolutely everything, only to look at it tomorrow. That's up to you. Okay, but it started as soon as you've paid. It's yours, just so you know. Hopefully that makes sense. The FTSE, somebody's asked you didn't look at the FTSE. You're right. Why did I focus on America? Where's our FTSE one? That's the FTSE one. It's not really shot up as much as the Dow, has it? For obvious reasons, I guess. Never tends to. Boom, boom, boom. That's where the FTSE, nothing came of that much, did it? That earlier down trade, that one, it was all right. It wasn't big. This is actually the killer one, which is the one from, when is that? 8th of April. 8th of April, which is before, when was the 8th of April? Last Wednesday. So it's from last Wednesday. But enough, you can start whenever you, I don't know how to keep explaining this. Just email me. You've paid, so you've got access to it. That's one definition of starting. Another definition of starting is whenever you want to work. If you want to work 10 years from now on it, it's up to you, my friend. You can work on it. It's like, let's put it this way. Let's say you bought a book, Badrinath, and you say to me, when can I start, Alpesh? Well, you've bought the book. So in a sense, you've started. But if you say, I don't want to read it for 120 years, then you'll be starting in 20 years. Does that make sense? Because you're not reopening the book. If you don't open it for 20 years, that's fine. That's up to you. But you've bought the book, so you've started. If that, hopefully that makes sense. Johnny, how do we access software? Alpesh and course, I'll resend. If you didn't immediately get to the download page, I'll resend you the email and download link, and that will give you access to the software and all the materials, and to my team and to me. So if there's any issues, and we'll install it for you as well if there's any issues. So don't worry, we'll do all of that as well. Okay, so it's all there, and hopefully all incredibly clear. Listen, thank you all, and thank you all who signed up. I think there were a couple. There's Lana and one more, Kingsley. I will send you a separate link to make sure that you can sign up, Kingsley. Okay, and make sure it's all there. So thank you all very much. I better end the webinar because this is just going on and on now. So all great. Thank you very much, Ian. Appreciate it. Yeah, exactly. Brian's put it brilliantly. I love what Brian just said. Brian said, I joined you in March, but not started yet, as I know it's there when I'm ready. Exactly. This is why we don't charge daily, weekly, monthly subscription fees, because people get busy. Life happens. So we say to them, take it. And all upgrades and updates are free anyway for life. And even when I update something, whenever you join, you'll still be getting access to everything as if from day one anyway. So if you start a month from now, Brian, you put it better than I could have done. Ravindra said, can you please send it to me too? Sorry, send what? Remind me, Ravindra. What do you want me to send? I didn't quite understand. What it means is that you are not being penalized for having a busy life. Some people, you know, they might be busy with looking after someone, and they say, I bought it, I'm going to start 2 months from now. I say, that's fine. That's the benefit. Thank you very much. Hope it works as have, not sure how to go about it. Oh, don't worry, Lana. We've got beginners that we train up and we teach them and handhold them. So there's not an issue on any of that. Ravinda, just remind me what you want me to send as well. What you want me to send. Just remind me, because I wasn't quite sure. Listen, I want to thank everybody who's been on. And like I said, I'm going to go now because I've got to go link to the program so I can make sure I'm looking at the right one, as I missed the end of the way. Oh, yeah. Ravinda, I'll send an email on everything. So you've got both. You've got both the trading link, which is that one. And whoops. You've also, I'll make sure, got the investing program link, which is that one. Okay. Trading, investing. They both got software, different mentoring course, different programs, both for life, no subscription fees. In future, it is going to be £5,000. It is going to be an annual fee. Not for you guys. It doesn't affect you guys at all. I'm talking about people in future. The venture capitalists are very keen. We have an annual fee. I hate that, but it's really up to them. So then we can go global. You who sign up will always have me as the mentor. After 1,000, there'll be other people who'll be mentoring, but you'll always have me because I won't take on any new students after we get to 1,000. The fees will be going up, not for you guys, doesn't affect you guys, but it's just because we're giving it away at the moment, and that's what I'm being shouted at by the investors. They're saying every person who comes on is somebody you're giving it away to effectively. Delighted, Ravinda. Okay. Thank you all very much indeed. Thank you all very much. I really appreciate you all being here.
and being on the program, and see you all on the other side, as it were. I'll turn the screen share off. So thanks everyone, and I'm going to go email all the apprentices. So just wait a few seconds, apprentices, and wait for an email in your inbox from me. And also, what I do in your apprentices, if I've got your cell phone numbers, I'll create a WhatsApp group with me on it, so that we double make sure you've got the emails, because sometimes the emails get in junk and stuff. That way we've got instant messenger contact with each other, one-to-one, okay, on that WhatsApp communication. All right, thank you all very much. Really want to thank everyone. Really appreciate you all being on the webinar. Thank you, and stay safe during these difficult times. I appreciate it. I've got a question from Lana. You asked for the coupon, Lana. So when you click there and you click on enroll, just so you know where you put the coupon, you will see it says there coupon, add coupon, add coupon. You put it in there, okay? And then you click apply. Got it? Got it? So let me remove that one just to show you. Add coupon, right? And then apply. Boom. All right. And it'll knock off 10% for you. All right. That's how it's done, Lana. Let me know if you got that. And that's the investing course. Remember, the investing course is there. It is, Lana. That's the one you were talking about, was investing. All right. You were talking about investing. That's investing. There it says investing. That's the link for investing. Okay. Hopefully that's all clear. Thanks very much. Right.